free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Yeah, good Saturday morning. Welcome to another edition of Florida Talk Real Estate. We got you for 2 hours of infotainment. Thanks for being there. 92.1, 101.7. I see you out there. Kind of, sort of. Get out from there. You are. Great to have you with us. Thanks for choosing to be along on a Saturday morning. Maybe you're listening on the free download, your iHeartRadio app. That's right. You can do that. We are worldwide. And it looks like live streaming, as usual, on a Saturday. You can go ahead and join us if you'd like to see some beautiful faces and maybe a not so beautiful one or two. Hey, how you doing, everybody? Find us. Facebook. Florida Talk Real Estate. On YouTube as well. That's Florida Talk Real Estate LLC. You'll find a ton of informational chunk videos as well. Thanks for being with us, however you choose to do that. You can be a part of the program. You got questions, comments, concerns in the world of real estate. You want to dive into the conversation. Don't be shy. 877-927-6969. That'll get you on the air. The first voice you'll hear, the melodious tones of our producer extraordinaire, Jimothy. What's up, my dude?
Hello, and good morning. Happy Saturday, gentlemen.
Yeah, always good to see you, my friend, and happy Saturday to you.
Thank you.
Hope we're setting up for an awesome weekend. I
Absolutely.
feel it in my bones.
Mm-hmm. Could be fun.
Yeah. I hate that weather is always brought up, but it's Florida, so it's kind of the way it goes. I think we're ramping up for an awesome weather weekend. Let me just ruin that for everybody.
Thanks, Johnny.
You're welcome.
Kiss it down.
I am your boy, Johnny C., your old buddy, your pal. Let's get your starting lineup on a Saturday. There's Ross Komarinetz, everybody. With Brightway Insurance, Juno Beach. How are you, my friend?
I am doing well. Good to see you, man.
It's
Good to see everybody. Hello, everyone.
There's everyone right there.
Yeah.
Like Mike Rauch, the mortgage guy from the mortgage firm. I feel like I haven't seen you in like 3 months.
A little bit. Yeah.
Yeah.
It's been a few weeks, I think.
At least, huh?
Not months, few weeks.
So I will tell the story and I'll be like, that was like 3 years ago. My wife's like, that was 8 years ago.
Yeah.
And then I'll tell the story and be like, that was 10 years ago. And they're like, dude, that was 2 months
Remember the
ago.
other day when we did that thing? And it's like, no, that was like 2 years ago, 2.5.
Yep.
Yeah.
So when they say time is relative and the older you get, the faster it goes, that is true.
Yeah.
And you also just seem to really morph it in your head.
I think there's, I say this as a joke, but maybe there's some truth to it. There's only so much room up there for storing new data, right?
True.
And so you have to kind of pick and choose what actually gets retained.
I wish we could do that. We don't get to decide that.
That could be that you can't even decide it.
Yeah, no, it happens when we sleep. It happens for you. It's like, don't want
It's
that.
like a selection?
Keep that.
Is that true?
Yeah, it is true.
No, but you could kind of force yourself to remember something by, say you did some vacation, you would associate it with something else that you did that's memorable. You know what I mean?
Truth, play the game to trick yourself.
Yeah, exactly.
Mhm.
To force your brain to not toss it.
That's pretty awesome. We're
Okay.
trying to remember to do that.
Yeah. Make a note.
Hey, welcome.
Hi, Jimothy.
Always.
Good morning, Mike.
It's funny. I was looking at Jimothy's screensaver, and it's got his name in reverse. And so I'm not going to say his last name on the air, but it's blank James. And I was like, oh, nice.
Look at that.
Right. Almost like a pirate name.
Arr.
Right? Blank.
My
blank
name's
James.
not. It's not a secret either.
Oh, it's not?
Yeah, no. You can say it on air.
So it's long James.
Long. Yeah. Mhm.
Yeah.
Long
Nice.
James.
The,
Mhm.
the pirate.
That's what he's known
Long
in.
Jim.
Yeah,
That's what he's known in the Asian countries.
When I was in my 20s, that was my pickup line. And my name
was
was
like-
like Jim Long. Want me to prove it?
Long.
Here's my license.
Very long. Sorry, guys.
Extremely. What are you sorry for?
We digress.
Oh,
well, hey,
good.
This
We
is
do
a
it
real
all the time.
estate show.
That's right. Well, let's apologize to our fearless leader. I've told you for 12 plus years now that he runs a top producing Keller Williams team. At Keller Williams Innovations, you find the Florida Home Pros team. We are sorry for not being very real estate intensive. Jimmy D, Jim DePola, how you be?
No apologies necessary. Happy South Florida, everybody. Just asking anybody listening to us on YouTube right now, watching on YouTube right now, let us know if the audio is working this week or not. Really appreciate if you do that. Got really a lot of good stuff to talk about today. First of all, mortgage rates are in the news. They've been in the news for a couple weeks now. They'll be in the news a couple weeks more, at least until we get through the Fed. In September, the meeting in I think it's mid-September. Not sure. I think
that's right. I don't know the exact.
yeah, I don't
date,
think
but
it's for some reason the 8th popped up, but also like the 17th popped up. So I don't remember, but it's going to be.
They are really starting to pepper it in the news. It's all the
Yeah.
same thing, just
Mhm.
packaged a little differently, but it is everywhere now.
It is. And then we're also going to be talking about some good news on the Florida home insurance situation. We're starting to see a little relief there, right, Ross? So things are starting to look a little better day by day in the insurance field right now, right?
Yeah, absolutely. We're seeing more carriers open up and loosen guidelines a little bit, so it's getting a little relief.
Yeah, I was just looking at a house. It was like $500,000 roughly, and for some reason I looked up the insurance quote, and it was $8,000 for the $500,000 house, and I was like, wow, because I know 4 years ago that was like 3,500, 4,500, right, Mike? Would you
Yeah.
think?
I would still think you could maybe find something in that range.
Yeah,
Maybe.
okay. Depends on where it is, how old it is, how big it is.
No, I totally
so-
get it, but I'm just saying
Yeah.
it's just like
But like
to me,
8,000, that was published like on a listing or something.
yeah,
Mm.
and I was just like, wow, it's just like it
So in my head though, so like just based on the kind of in my mind, I kind of settle in on about a 40% difference for a lot of folks in the last 4 years or so.
Oh, bump up. Yeah.
Yeah. Does that feel
That
probably
sounds
close to
about
accurate,
right,
Ross?
right?
On average?
I would probably say if you've had Citizens, yes. If you've had other carriers, it might be, like you may have started out pretty low, probably 4 years ago, and now it might be close to like double what you were paying. Depending. I've seen that.
So in my mind, I'm thinking, 4 or 5 years ago, that was a $4,000 a year, policy for that $500,000 home. in my head,
And I
roughly,
mean, again,
with a lot of variables that can change, as you know.
if that's an $8,000, $500,000, $8,000 in Port St. Lucie, whoa, what's going on? If that's in Broward, it could be pretty reasonable.
Yeah.
You know?
And too many moving parts
Right, yeah.
to really hone in on it. But when I hear that in my head, I'm like, yeah, that's probably $4,000 a few years ago on average. So that's, it's funny when you say that, Jim. I've had too many conversations in the last couple of weeks because a lot of folks know that I'm in the process to kind of like
getting going.
Yeah, they're like, it's weird. Now is the time to buy. And I explained to them, I'm like, well, I kind of work on this show with some really, really people that are great at what they do. And yeah, it might not seem like it, but if you really, break it down, I'm like, this is the way it is. And we talk about insurance at the end. I'm like, I think the big difference maker for me and everybody in the end is going to be how much the damn insurance is. I'm not worried about the interest rate. It's a whole lot, to tell you the truth. It's that insurance.
It's just like the condo owners, buyers in general have had a triple whammy blow, if you will. First of all, prices increased a lot. Second of all, interest rates went high. And third of all, insurance rose at the same time. With the condo owners, they have the law that makes them put the reserves together for the community, the financial reserves they need, which was waived for a long time or kind of ignored. They have to do the structural engineering reports. I know. I was listening to jackhammers in my building all day yesterday. Oh my God. I thought
the work going.
Oh my gosh. I found out yesterday. I thought my building was done before I moved in.
Oh.
And because they were finishing off the pool. So I figured, they did the building. They're finishing the pool for the whole community, right? A 13-story building. So it's a big pool area. And I'm like, they're finishing up the pool. Well, it was supposed to be 3 months. It took them 6. And now they're going to start cracking up the building with all the chips falling off the building onto the brand new pool deck.
Wow.
I'm like, wow, I cannot believe they ran the job this way. I'm like, why would you do that? And one of the tech guy goes, I know. I'm like, no, you don't know.
Yeah, tell me, please.
No, you don't know. Exactly.
Now you know.
But anyway, between the structural engineering reports that need to be done, the reserves, and then the cost for insurance for communities also, that's gone up. So the condos are going through the triple whammy. Now
They got the quadruple whammy because their HOA is going up.
Well, that's part of the structural engineering
I mean.
reports and the reserves and all that. That's all.
But that's the fourth, right? Because you had prices, interest rates, insurance, their own insurance, and now
Not
HOA.
prices for condo. I had reserves, right? That they have to boost up the reserves, the insurance, and what was the third thing? Now I'm confused. And
Usually, I was
cost
just
of
saying,
eggs.
like
like
buyers in
I'm
general.
sorry, what did you just say, Ross?
Cost of eggs. The cost of eggs.
Oh my God.
Yeah.
How much is a gallon of milk?
And
Yeah.
the rent is
But anyway,
too
the
damn high.
condos are going through a triple whammy, and so are the buyers. They're going through a triple whammy too. So they're going through a shock. And one thing is the interest rates, and this is to be fair to everybody, the interest rates are not historically high, not
Oh,
over the
goodness.
last 30 years or the
Far from
40 years. However, the prices are at the highest point we've ever seen in the history of the United States. So having higher interest rates, even though they're not the highest, and having these super high rates, it is squeezing everybody, which is why it's a great time to buy right now. And we're going to get into that in a little bit because it is a really good time to buy right now. I really believe that.
Me too.
And we're going to give you real life examples and real life reasons about why, and not just my gut tells me it's not a good time to buy or sell.
Got to trust
I
your
don't,
gut, Jim.
yeah, don't trust
Hey.
my gut.
Intuition is a real thing.
Yeah.
So
And
intuition is a real word.
It
and you have
is.
to feel good about what you're doing at the time you're doing it, but just we got a lot to teach you today. Just want to do a couple shout outs. First of all, let's say shout out to Carl. Carl's checking in from Ireland right now.
Oh,
Carl
nice.
and Maggie, so very cool. I should call him JR. Sorry about that, Carl. But JR and Maggie are checking us out from Ireland right now. We're at Shannon, Ireland. And I know that they were just in the process of buying a place out there, and they're going to start renovating it. So I'd love to get some more pictures when you get a chance. Susan, thank you for letting me know about YouTube. Jimmy, the YouTube is crisp and clear today. Thank you, Susan.
Mhm.
I tried to reach out to you last week just to say hello and catch up with you, Susan. Maybe we can catch up this week. Betty, just wanted to say thank you for coming in. You're one of our top fans, one of Mike's big fans, and
Number
thanks
one.
for coming in. And my mom, love you, Mom, always. Happy birthday from last week.
Happy
Yeah,
belated.
Yeah, happy
Hopefully you
belated
told her
birthday. I did.
On her birthday.
I did.
Okay.
Yes, we did. And okay, so I wanted to do a little shout out about a property I just closed in Plantation and just kind of show you. I think this kind of shows you what makes us a little different than most realtors. I'm not saying all realtors, but most realtors, and why selecting the right realtor can really make a big difference in the process you're doing. We were selling an estate home down in Plantation. We got that house under contract 3 times before we actually closed. We closed on it Monday, thank God.
Nice.
But we had big problems in the closing the whole way through with multiple things. So the first problem we had is very interesting. And people that have distressed homes, meaning homes that aren't in really great shape, let's say they're really, really old and dated, and they really need everything it looks like before that 70s show, even before that. And you need everything, and people are coming in and they're trying to buy the house. There's a lot of investors out there. I'm getting more investor offers on my house than my house is for sale than ever before.
Huh.
These investor offers are junk to most sellers because it would actually make them, they're offering so low on the property that it would make the seller upside down if they took the offer, meaning the mortgage is more than what the investors are offering.
Wow.
And the sellers in every single one of these cases have tons of equity in their house. So why would they sell it for less than what is owed? It wouldn't even work, right? You couldn't even get a bank to do it. The bank would just like sell the house and make the profit, give us our money back, and then keep the rest. Right? They're like, what are you doing a short sale
What
for?
are you doing?
Yeah. So we're getting a lot of those kind of offers. And if this house was like a perfect example of how you could be taken advantage of in this case, because it was an estate sale and the house was very old and there was some additions that were put on it way back in the day. So we had a bidding war when we put this house on the market because we priced it correctly, even though it needed a lot of work. And then what ended up happening was one of the people that bought it gave us this, teary letter saying how much they wanted and they wanted to move in and blah, blah, blah.
Oh, the old buyer. What did you call those letters?
I
Motivation
forget.
letter? Or
I
there's-
forget what they're called.
there's a
but there
name
was
for
a
'em.
name for them, and I couldn't remember because I got one just recently. This happened months ago, but I got another one just recently, and I don't like those letters because it can create a lot of problems
It's
legally.
like a heart something.
Yeah, I can't remember. Do you know what we're talking about, Ross?
Used to be commonplace.
Like
that you would
not a hardship letter.
no hearts like
heart,
from the
yeah.
heart from the heart letter or something.
The first house
you-
we made an offer on, we wrote one.
You wrote a
You did,
letter and
yeah.
it accompanies your offer, and you're just basically trying to make a personal connection so that you have an opportunity. It's not just about dollars and cents.
So
it's about
right,
people.
so
and
they
families.
wrote that kind of letter.
The heart
I could
tug.
talk later about why those letters are not really good, but they wrote one of those kind of letters, and they said they wanted a buyer to move in, and then it really got me nervous because the buyer was an attorney and the real estate agent was an attorney. And sorry, attorneys, that doesn't mean they're all bad out there, but my radar goes up when I got a bunch of attorneys working on one of my deals, and they're not representing my seller. And so they put us in a contract. We told them very clearly, look, don't go inspect away, but unless you find that the house is crumbling down,
Don't bother us.
Yeah, don't bother us. The inspection's for your purposes only.
Like, in other words, it's priced right because of this stuff.
Right.
So
we
know
priced
about
it
it. You
because
know
of
about
these
it.
repairs, and we
Yeah.
disclosed everything. So then they come back to us. They go through the inspection. Then they say they're going to come back and ask for money, but they won't. Then they just ask for an extension, but they haven't asked for anything. Just an extension. Why? Because they're saying that the city said that the additions on the property, which were done, God knows when, a long, long time ago, 30, 40 years ago, were never permitted by the city. So the buyer has to bring out structural engineers to find out if that structure is safe and whether it was built to today's code, which of course it would not be built today's code if it was built 40 years ago.
Right.
So I could tell this was the big squeeze where they were really going to try to go for the jugular on the seller. We already priced at a fixer up price, and now they're coming in for more money.
Right.
So I kept haggling and I'm dealing with two attorneys now, right? So I kept haggling with them and saying, it doesn't make any sense what you're telling us because the additions are on the county records. If the footprint is the same today as it was in the county records, that means somebody from the city said, hey, there was an addition put on this house. And now, county, you need to tax them for the improvements on that house, right? And I said, this has been going on for God knows how long. I don't know when they changed the chart, but it looks exactly like the house is today with the addition. So they were like, no, no, no. So we ended up canceling the contract. They said that we made a huge mistake because we had this problem with the city. So then I had to talk to the law office of Paul A. Krasker and say to Paul, it's like, hey, look, we don't believe that there's any problems with the permits on this house, but this is what we were told by the buyer. If we put it back on the market and sell it to somebody else, does the seller have to disclose that the other buyers told us a bunch of BS, right? Because to me, it's BS, right? They had no proof. And Paul said, on the air of caution, you should probably correct it. So then I had to go down to the city. Now, the whole thing is this family lives in New York. They don't know anything about down here. They haven't ever seen the house really, other than they came down for a funeral. And I had to handle everything. So I went to the city and I met with the building department. The building department was like, yeah, those people came. We don't know what they're making a big stink about. We don't have a problem with this at all. So that just showed us the original buyers were trying to squeeze us without any real proof.
Right.
So then finally they agreed to give us a letter saying that the house was done correctly and that they're grandfathering in the work that was done on the property. Then we put it back on the market. Got a buyer right away, got the same amount that we started with the first time. That person walked away from the repairs, right? Even though we told them up front, we're not doing anything. When they looked at the house, they said, yeah, not for us. So then we put it under the contract with the third person, got the same price, had a bidding war, got the same price. This is like 6 weeks later after we put it on the market the first time. But we found out that the house had termites. So then somebody had to hire a termite contractor, get them out there and do the work on the termites. I handled that for the family, handled everything for them. All they had to do is make the phone call to give them the credit card, and I handled everything down here.
Nice.
We had a cleaning crew come down. I took care of everything for that. We had one of those 800, take my junk away companies. I handled all that for them. So they were all up in New York the whole time. Plus, I was dealing not fully because they had to deal with them too, but the estate probate attorney to get his permission to sell the house because there had to be a court approval for the house to be sold. So besides just selling the house,
And it's a snail's process right now to get a death certificate too.
oh yeah,
Yeah, it's like it doesn't happen quickly
no,
because
So-
I don't know when they passed, sadly, but there's been a like hostage takeover of
it's true.
I laugh a little bit, but we were being held ransom, and they're like, "Nah, we're not paying you guys."
I know it's crazy.
Yeah, I don't know how much news that made, but it's been hard to get that kind of paperwork for a
It's
while.
kind of like with the IRS too, trying to deal with the IRS. If you have any questions and stuff, it's almost impossible to get them on the phone because they don't have any staff
just no
because
staff.
they gutted everything.
Sure.
So there's nobody to talk to.
Right.
Right. And you could be being fined per day and there's nobody to talk to. Right. It's crazy.
That is crazy.
But it's just like the same thing. It's
Yeah.
like, oh, death certificate, we'll give it to you when we feel like
When
it.
we can, yeah.
It's just something you'd think it'd be not that difficult
Right?
to process. You don't have to do a lot of research on that one.
Well, I guess
think.
the system got like hacked, and they were asking ransom for it.
Oh,
Yeah, I don't know how much news this made, but
I didn't
They-
hear anything
they-
about that.
I can tell you that a couple of years ago, I worked with two South Florida county officials. I don't even want to say the county, right? But two South Florida county officials. They work for the same county, and the whole county's computer systems were hacked, right?
Ransomware.
Yep, and they couldn't really use the system or anything, and they weren't telling anybody. And the only reason why I knew is because I was working with two customers who worked for the county in those positions that were dealing with those issues. Just a coincidence, right? But it happens a lot more than you think, and a lot of times they pay.
Yeah.
From what I understand, they just pay it because they don't have
What else you
a
got to
choice.
Right.
So, and millions and millions.
Yeah,
So,
I think in this case, I don't know how it resolved or if it ever did, but I think in this case they were like, no, we're just not going to pay. So it was like, yeah, you're going to wait for the death certificate
mhm.
and whatever else was involved with the ransom, the takeover.
I didn't hear that at all.
Yeah.
Okay.
Well,
And again, I don't know the resolution or if there's been one or not. Sorry to
yeah, I
totally
don't know if
derail the
it's been
conversation.
resolved. I know the ones that I was talking about years ago, it did get resolved, and it took a couple of months though, but it got resolved. But it was pretty crazy town.
But it
And-
sounds like your probate situation, it went a little smooth, so maybe it was ahead of all this chaos.
Yeah, I don't know how they got it, but they got it because the person did pass kind of recently, but they got everything was okay. But the whole thing worked out for this family. And the thing is, they only had to come down here one time. Even the closing was taken care of up north.
Amazing.
They didn't have to do anything. We handled it. There were many bumps along the right way. I just, hit the high points, like the time when the termite people put the tents over the house and then the chimney for the house collapsed from the weight of the tents.
Oh no.
Yeah. And then they came in for the termite inspection for the VA buyer and then find out that there were termites in the house after we had tented it. So then we had to get the termite company to come back out, right?
This is the same house?
Yeah, the same house. So
You had a VA buyer.
yep, we had a VA
Nice.
buyer on that. So the whole thing, the whole thing was
Needed some special handling.
yeah, and we had the resources, and even when we didn't have the resources, we found the resources that they needed to get it done.
Yeah.
So that's the difference between hiring full-time professional people and people that's like, oh yeah, I'd love to help you sell your house, and it's just somebody who's doing it part-time and not
Or-
in the business.
Or even just on that first deal where they, you're dealing with lawyers on the other side of it and they're wanting to steamroll you a little bit. And so you got to have somebody who can stand up to that.
When
right?
Paul, that's true because I could have caved because the sellers were so relying on me, and they would have like if I said drop it
Yeah.
$100,000, they probably would have.
Yeah.
Right. And I don't want that responsibility. I would never do that. They're the boss. I'm just the consultant.
Right.
They're always the boss. I'm just a consultant. I tell you what I think. You don't have to agree with me. You'd make your decision. I don't get mad at you for the decision you make.
Right.
Because it's your decision. I
You
just
don't
give you the
pout.
advice. I do not pout. I just go, okay, if that's the way you want to go.
I guess if that's how you want to
If
do
that's
it.
how you want to do
Against
it.
my
Let's go-
advice.
Let's go on this
pout.
ride.
You should pout a little bit. I mean,
Let's go on Mr. Toad's
I feel
Wild
like
Ride.
Jim makes a strong case generally.
Yeah,
like
I feel like you're
you
right.
sure? Did you guys hear what I just was saying just now?
Do you
Let me try it
understand the
again.
words
But
coming out of my
sometimes
mouth?
people don't pick up on all like the cues, emotional, physical, like verbal. So sometimes a little pouting can go a long way. They're like, oh, maybe, is he pouting?
Throw a bit of a fit.
It's true. Look, we have a lot of people that are tuning in right now. So instead of taking the break, I think we're just going to plow through and we're going to talk about mortgage interest rates because I think that's why everybody's here. Everybody wants to talk. Maybe it's also about the insurance stuff because that's really important stuff too. So we're going to get to Ross's stuff right afterwards. But let's talk a little bit about what's going on with the interest rates and why I think it's a good time to buy.
All right, perfect. Let me just set you up with the .com. Very important access to the entire team, as Jim noted. When you're dealing with buying a home, selling a home, stuck with a home, you don't know what to do. Maybe you have a loss in the family and you're miles away. Everything in between. We got a team of pros to handle all that and so much more. Remember, FloridaTalkRealEstate.com. Know it, use it, love it, share it. It's FloridaTalkRealEstate.com, your one-stop real estate shop. FloridaTalkRealEstate.com.
Thank you, sir. Thank you. Hey, look, if anybody opens up, and I know you're wonky enough to do this, Florida Talk Real Estate fans, if you go to the Freddie Mac page,
I've got mine open.
I know Mike is wonky enough to do this. If you go to the Freddie Mac page and you look at the chart for weekly interest rates, they've been doing a survey since 1970. Actually, goes back to 70 now. It originally, when I started, went back to 1971, but it goes back all the way to 1970.
No, Google, I did not mean Return of the Mac.
So
I only see 71. I don't know. How are you going that far back?
well, let me see here. I'll tell you.
Wait, it's super important to answer this question right now.
Wait,
How far
so-
back does it go?
Oh, you're
Way
right.
back.
Okay, no, you're right. It says 1970, but actually starts April 2nd, 1971.
Yes, sir.
And what was the interest rate on April 2nd, 1971? The first time they did the weekly survey for Freddie Mac. What was the interest rate? April 2nd, 1971.
I'm gonna go for like around an average of like 8. I'm gonna say 8%.
What do you think, Ross?
I kind of like that. Maybe I'm going to say 7.5.
7.5. What do you
Ooh.
think?
8 and a
Eight.
half, somewhere right around
I'm
there.
not asking Mike.
I'm going to guess
Go ahead.
7.33.
Nah. Yeah, 7.33.
that's
Exactly.
good,
Because
Mike.
he's looking at the
I couldn't
chart.
get it all the way over to the end in time.
So that was
they all went over, so nobody won.
yeah,
Sorry, guys.
1971. We were at the interest rates that we were at basically in May.
Yeah, like where it should
Right,
be.
yeah.
Like where it should be.
50 years ago, basically, right? 53 years or 52 years, whatever. So
I'm
it
going to
just
play
kinda
devil's
show-
advocate here.
Mm-hmm.
So that is 52 years, right?
Mm-hmm.
So for the first half of that 52 years, it was higher. And the second half of that 52 years, it's been much lower. If you look at the chart.
Yeah, it didn't get below that number until 1993.
So
Let's see.
half the time it's been high.
Yeah,
and half the time
1993.
it's been low. Like if you look at the chart.
Yeah, and actually, if you
it's not
look
even
at
not quite half, I would say.
yeah, if you look at 1993, we are at 6.47 September 24th, 1993, which is exact. Is that where we are right now, Mike, or 649?
649.
Okay, so basically, we're at the same interest rates we were in 1993, and we were at the same interest rates again, roughly in 2001, right? Parts of 2001 and 2002. And then basically after that, we were at 6.47 in 2006. I'm just trying to get to the closest that we were at 6.47. So really, since 2006, we haven't been much higher than 6.47 until we get to 2020, 2021. Then we start moving up
And
pretty
that's all in
fast.
the name of trying to control inflation. But remember,
Yes, exactly.
it was like 8%.
Yeah.
Yeah. So
Yeah, I think it was You mean back then in 06, or
No,
you talking
the
about today?
inflation number.
Yeah, it was like 9.1, I think. I think
Yeah,
it got
so-
into the nines.
So we were raising rates to try to slow that beast down.
Yeah.
But
So
I think you have so many people that are younger
Mhm.
that go, well, as long as I've been alive, it's been 6.5 or less. Or even when they could pay attention to it,
3.
down to 5 and
Yeah.
4
Mhm.
and 3, and then everybody that is a little bit older is like,
Mhm.
man, I remember when they were 9,
Yeah.
12.
because, half the time that was 9 and half the time it was below 6.
it's
But it's only people that have been alive the past 2 years that have been kind of in the sixes.
and
and
it's-
and
In the
those are-
sixes.
The numbers
maybe
you're
the
looking at are
sevens.
like the prime number, right? That's like
It's
pretty good credit. Like
no, you don't really know actually. So they survey. I don't know how many loans they survey, but they basically say out of all the loans written last week, what's the average interest rate? And they used to talk about like they would have points, and
Mhm.
back in the day it was like usually like something like 3/4 of a point or maybe a point for these rates. But they don't publish that anymore. They just say here's the rate, and so week over week of all the loans surveyed, this was the average rate.
Okay.
So there's some that are higher, some that are lower, depending on credit, depending on down payment, depending on
Sure.
circumstances, whether it was maybe a condo versus prime, single family. I'm not sure what all goes into that other than of all the loans we polled, this was the average rate.
So it's not a prime number. It's an average number for the
Mhm.
week thereof. Thursday
Yeah.
to Thursday. Is
Yeah,
that how
it
that
doesn't
works?
mean like that was Freddie Mac was offering 6.5. Right? It doesn't work that way.
no,
this
that's a
was the rate that was
survey
offered.
that the
Yeah,
loan officers
snapshot.
respond to.
But it's they've used the same mechanism for the past 50 years now.
That's
so it's
why
just a
that's
really
why
good
we use it.
week over week what's happening in the market.
Yep.
Right. Which way are rates going type of thing.
Right.
So it's really
it's
useful.
a, it's
for
a
that regard.
benchmark. It isn't what you're getting as your interest rate,
Yeah.
but it's the best way to see where we're trending.
Sure.
Right. This
But,
is all about trends.
Yeah, like if you were Johnny 2 weeks ago, if you were shopping, what was it 2 weeks ago?
2 weeks ago it was 673.
673. So basically, if you're an active shopper, like you not in contract, you haven't locked in your rate. 2 weeks ago, you were looking at numbers, and now you're looking at numbers. Your rate has probably gone down a quarter to 3/8 of a point.
Right.
Right. Just with the market movement.
Right. Just in a couple weeks.
So it's been good for people who are actively shopping. If you got into contract 2 weeks ago, you might have locked your rate, and you might be feeling a little salty about that right now because rates have come down a little bit. And then you're like, well, wait a second. Do I get to go down?
Yeah.
You're like, oh, you locked in, you protected
Mhm.
yourself against market movement, but there may be some ways to take advantage of downward movement with, float down policies and stuff. But in general, you might be like, well, geez, I feel like I missed out, and I have to have that conversation. Well, we locked in,
Yeah.
we locked in. So
Yeah.
good thing it didn't go up, right? Type of thing. Look on the bright side.
Yeah,
It didn't,
yeah,
it didn't-
exactly.
It didn't go up for you.
I think
but-
once you lock, you gotta stop looking at the rate movement.
That's
Don't
it.
do that. Don't.
Yeah,
I-
because you drive yourself crazy. It's like
Yeah.
after you already buy your car,
Unless there's
don't
something
look
you can
anymore.
do about it.
Right?
If there's something you can do about it.
if there's something you could do about it.
Down.
Yeah.
Well,
Yeah.
well, let's just go in the interest rates a little bit deeper, because I know there's a lot of people talking about potential for refi or how this is going to affect their purchase power, which we haven't talked about in a long time.
Headlines in the last week saying refi numbers are starting to crank up.
Well, Mike has a little. I thought so too, but Mike
That's
has
headlines.
a different opinion. But we're going to get into
Yeah.
that. Hold on. Let me just set the.
Hey,
let me
Mike.
set the. I know, right? Let me set the foundation just a little bit. Okay, so we're at 649 this week on Freddie Mac. That's only a 0.02 increase from last week, which was 647.
Increase.
Yeah, it's an
I haven't
increase
seen
of
any headlines about
0.02.
increases, Jim.
The Freddie
Points-
Mac went up
0.02.
0.02.
I know. 2
Right.
100s.
Okay, so right, which means you
Nothing.
save about 3 cents
Yeah, it did
a,
nothing.
a month on your mortgage payment. Okay, so just to put this in perspective, though, where we are right now in recent history, not like 1971 history, but today's history, if you will. Our peak for the year so far was May 2nd, which we came out at 722. So we're basically 3/4 of a point lower than May of this year, which was the high for 2024 so far. But the super high over the last like 9 years or something was November. How come it has an October?
What?
Wait a second.
Yeah. November 2nd.
No, it's
October
October.
26th.
I always thought it was
7.79.
November. October 26th. 2023 was 779. We're at 649 right now. So if my math's correct, that's 1.3% drop in interest rate from Freddie Mac's high of November of last year.
Getting that inflation under control, baby.
Well, we'll see. We're gonna go into a little bit of that too, because I know I like talking about the economy with you, Johnny. So we're gonna talk about those reports that came out last week. But Mike, so here's the thing. To me, it looks like if there's a 1.3 drop on Freddie Mac from November of last year to today, right now, if I bought something in November of last year and I didn't buy down points or anything like that, shouldn't I be looking at a refi right now?
Yeah, I mean, I think you should be at least examining it. Like, you should take a look and see if there's usually you have a goal with your refinance. So is the market are the market conditions right to achieve that goal?
So let me ask you this. Let's forget about cash out refi for right now, which I know a lot of people are doing. Okay. I hear a lot of people are doing cash out refi. I don't like that because that shows me weakness in the economy. But let's say they're not doing a cash out refi. They're just doing a straight refi because all they want to do is either get rid of their PMI or get rid of their PMI and drop the interest rate.
Hey, can I pile one quick thing?
Yes.
If you're just doing a straight refi, is it have the same equity positioning requirement as a cash out?
No.
Okay, let's not go there now.
I was just a question.
No, but that's a great
that
question.
makes a big difference.
Yeah, and
because if you don't have the equity positioning,
we're
you ain't getting a cash out.
gonna talk about cash out refi, but I want to talk about just the straight refi first to see the savings that you can or not get when you do it. So remember, Mike, back in the day, this is like right when you first came on the show, it's probably 2015, 2016. We had that guy in Winston Trails who was a vet, and he refied his house like 3 times.
Yeah.
He was a vet. I felt like he was taken advantage of. He refied the house 3 times the same year because he was like, I could save 1/8 of a point. I could save 0.16. And then he ended up selling the house that year, and he stripped out so much of his equity in the closing costs and fees for refine.
VA loans are a particular maybe target for that type of, I don't know if it's predatory lending, but it's, refi churning type of thing.
Mm-hmm.
And that's because the VA, if you're not doing cash out, you do what's called an IRRL or IRRRL, interest rate refinance reduction loan. So there's 3 R's in there. But those ones there's no qualification, right? So as long as you're current on your mortgage,
you can just do it.
You just do it.
But
now that doesn't mean that it's no cost, right?
Right, you're still being charged.
This is where his equity position is eroding because he's refinancing to lower his interest rate, but he's tacking on the closing costs, and so his principal balance is going up.
Yeah, I just want to kind of gloss over that part.
Oh, okay.
So the thing is, no, that's okay. I know I brought it up, but what I was trying to use is the guy didn't know. The point I was trying to make was the guy didn't know when he should refi or when he shouldn't.
Yeah.
Because he didn't understand the savings versus the costs.
Yeah.
And that's what I want to teach people today, because there's a lot of people that might be refining for the first time. People that bought over the last couple of years, this might be the first time that they have the chance to do a refi. So let's do the very basic thing we always do, Mike, which is just the regular straight refi. When does it make sense? When does it not make sense? So let's say that you're bringing, just to keep things very simple, you're going from 7% to 6%, right? I'm just saying you're going to do that. We're dropping a point, let's say, or 7.5 to 6.5, whatever you feel comfortable with.
Okay.
But you're dropping a point. How do I know if dropping that point, if a mortgage person says, hey, Jim, you can go from 7.5 to 6.5, let's go ahead and do it. How do I know if it's really worth doing that or not?
Let's just say let's put away the long-term analysis and just say short-term, right? So you're basically the reason you're gonna lower interest rate would equal lower payment, right? So if it cost you nothing, if there was zero cost, absolutely you would refinance, get the lower interest rate because your monthly payment is going to be lower. Set aside the long-term that you're restarting the new 30-year term, something like that. Just short-term. If it costs you nothing, absolutely refinance at 1/8 of a point, refinance at 1/4 of a point, right? There's no cost, right? Nothing. If it costs you something, now you have to figure out, what am I saving per month? How long until I recoup my costs? And then once you've hit that recoupment period, or what I call the break-even period, then you're kind of you made the right decision. You're in the black on that, right? So when there are costs involved, which invariably refinances have costs, guys, you have to figure out how long until you make your money back.
Right.
Like, Jim, give me $3,000 right now, and I'm going to give you $300 a month for the next however many, for the rest of the life of the loan. So after 10 months, you've recovered your 3,000, and then every month after that,
I'm saving
you're
300.
doing great. You're
Right.
doing
I'm
great,
saving $300 a month.
So you kind of want like the shortest break-even period possible.
Yeah.
Because you compare that to, well, how long are you going to be in the home? How long
Right.
until you refinance again? So, if I have a 18-month break even, well, guess what? If I refinance again in 12 months, I shouldn't have done this refi.
Right.
Right. So that's the simplest
Or
way to
if
analyze it.
here's some things that we saw back in the day when people were trying to refi, but the interest rates weren't working for them, right? Sometimes they were working for people, sometimes they weren't. So they call us up, hey Jim, I want to go from 5 to 4 back then.
Yeah.
Okay, I'm just making it up. But they found out that it was going to cost them, I'm making up a number, $6,000 to do the refi.
Not out of pocket, but they're going to throw it onto their
Right.
principal balance.
It's a cost. And that's another thing that Johnny always says, they just throw it, and you don't say this in a flippant way, but they just throw the money into the loan so you don't pull it out of your pocket. That's true. But when we're doing this analysis, it is still a cost of doing business, and it's costing you either equity or money out of your pocket
Right.
to
And it's a
do it.
conversation you should be having. And if you're not having that, you should pick up the phone and find somebody
Sure.
that's going to have that
Sure.
conversation. I had it with Mike several times before we refied.
So this is a real cost. So even though you might not feel it, it's there and it's real. So what you would do is, let's just use this example. Let's say somebody calls up, or I call you up, Mike. Hey, Mike, I want to go from 5 to 4, and you do the calculation. Go, okay, Jim, it's going to cost you $6,000 to do the 5 to the 4, but you're going to save $100 a month, just to make it simple.
Yep.
Well, that means it's going to take me 5 years to pay
60
back that
months.
money, 60 months, right? 5 years to pay back that money. A lot of times what we used to say back in the day, that's not really a very good bet or savings maybe to want to do that. You have to really consider that harder. And why am I saying that? Because you don't know what's going to happen in 5 years.
Life happens. We
Life
know that.
happens, right? You have a familiar change, or your job relocation, or you outgrow the house or whatever during that 5 years, and then you decide you don't want to keep the house anymore and you go to sell it. Well, you never recouped the money from the supposed savings you're doing on that loan. That's what I don't want people to do, is to do the refi when maybe it isn't a good idea. It's awesome when you could do a refi and it makes financial sense, right? Big smile on everybody's face, high-fiving. But don't do it just because you think you're saving money because your interest rates drop. That's not enough to determine if you should do the refi or not, at least in my opinion.
Yeah, I always try to have my refi conversations talking about what's the goal of the refinance. And so there may be a situation, Jim, where your payment, I need my budget is so tight, I need my payment to be $180 less, I'll take it. And if that's like the prime number one reason that you're looking at a refinance, is to lower your payment because you have to, not because it makes sense financially, even short term, near to, midterm, long term, then I might try to talk you out of it, but I might say, okay, well, this is one way of achieving that goal. Talking to Ross about insurance is another way of perhaps achieving that budget goal. So I really try to figure out what they're looking to do. If someone says, listen, I need the lowest rate possible, and I don't like interest, I want to pay off this loan as quick as I can, then I'll have a different conversation. They'll say, well, can you do that? How long is it going to take? Pay it off. Don't worry about refinancing, right? So I try to have that conversation for what is the goal of the refinance? Does this market allow you to achieve it? There's a lot that goes into it. Like you're talking about somebody who bought in November of last year. Well, home value is pretty important to this refinance conversation. Even if you're not doing a cash out, you still have to have some space to take on that additional principal for the costs. Do you have enough equity position to do that? Are you in a position, has your equity grown enough so that you can cancel mortgage insurance if you have it? So maybe you started with an FHA loan, you want to refinance to a conventional loan. Well, you kind of want that 20% equity position, not because you have to, but because you don't want mortgage insurance. That's part of the money you want to save. So there's just a lot that goes into it. Home value, of course, you have to qualify, and then is it going to achieve your financial goals, whatever those are?
You brought up a point, because I'm rusty on talking about this. We haven't talked about it in a few years. You brought up a point that I think is really important too. is how deep are you into the original loan you have?
Yeah.
So if you've been into that loan for 15 years,
Yes.
right? And
Just going to ask that question.
oh, good, good.
Mhm.
So if
No,
you're
but
in
go
that
ahead.
loan
Yeah.
for 15 years and you do quote the refi, you're probably going to want to have a talk with your mortgage loan officer to say, hey, I'd really maybe slide into a 15-year loan this time instead of a 30-year. So I'm not losing all that time that I paid off that 30-year mortgage to half its life.
Yep.
Because some people, they'll take the 30-year mortgage, pay off 15 years of the mortgage, do the refi, go back into a 30-year mortgage, and they're starting day one for another 30 years.
Yeah, but you really reduced your payment.
Big time.
Well,
though, huh?
and
So it depends on the goal.
right. So it depends on the goal,
Yeah.
but that's another consideration that you should be considering. Another
Yeah,
consideration you should be
You should definitely
considering.
consider all of the considerations.
But do
You
you
should.
do you still save money that way because now you've extended that loan, so
So-
you've extended your interest.
that one would that so when I say the
Amount.
goal, that person's goal, that borrower's goal is to save money on interest, right? I want to pay the least amount of interest over the remaining life or whatever. So I would say, okay, well, what happens if you pay off your current loan in 15 years at your current rate? What are you paying? Okay, now compare that to the refinance. So yes, we got a lower interest rate. Maybe we're even doing the same term, 15 years, but there's costs. And so when you roll in those costs, remember, the shorter the term, the the tacking onto the principal balance is not a good idea, right? Increasing the amount of money you're borrowing,
right.
even
That
at the
makes
lower
sense,
interest
right.
rate, like the shorter the term, the more harder that gets to make sense financially.
But
So,
Right.
the longer the term, you throw extra on top of for the principal. That's a great way to kind of combat it.
yeah, I could
Potentially.
take, like, even if, let's say you
Mhm.
had 22 years left on your loan, you say, you know what, Mike, I'm thinking about this 15-year rate. I would do the math. I would say, well, what happens if you take your current loan and pay it off in 15 years? What would that look like?
Mhm.
What would that cost you over the long term? But that's a different analysis, because
Right.
that's like, I want to make the wisest financial decision as it relates to interest over time versus a budget consideration or cash out for other project consideration. So you have to have these kind of talks for sure.
For the folks that are like, well, why would Mike care what my goal is? Well, there's
an
great
interesting one.
examples.
I
There's
don't know
great
why.
examples because why do I care?
Why do I care so much?
Yeah, because there are people that are just going to do it. They're not going to
Yes,
ask questions. They're
that's
not going to
exactly-
do the
Yeah,
math
right.
for you. They're not going to say, hey,
Mhm.
I don't know if this makes the most financial sense for you for your goal.
Yeah.
Mike cares because he wants you to make the best educated decision for yourself. Ultimately, if you're like, dude, stand up a business, just do it.
Yes, of course.
He's probably going to be like,
Okay.
okay.
I'll be like,
You
Jim.
got it.
Like, okay, I talked to you about it, right? I just want to make sure.
Yeah.
Like, we definitely discussed this stuff. And
Yeah. So the reality
yeah.
is it's all about math. There's so much math involved here, and Mike's gonna lay it out because he's
Mhm.
gonna help you walk through that math game. And
yeah.
sometimes it's comparing the math, as you just noted. Well, let's do this versus what if you did that instead of that? Oh, okay. Well, this might be your better option. But if you're wondering why do you care? Well, he cares because it's
Yeah.
A, that's Mike Rauch, and B, because it matters in your decision making.
I just want to help you. My job essentially is to help you understand enough so that you can make good decisions,
That's it.
right?
What's
And
best
so
for you.
you might not know the questions to ask or the angles to look at it. And so that's my job, is to help you make those decisions and achieve the goal that you have.
Right.
Now let's talk about cash out refi.
Yeah,
Right now
thank
we're
you.
talking about the cash out refi people, right? I know there's a lot of people out there. I was talking at my business networking group Thursday, and they said they're getting a lot of refis coming in, but it's mostly cash out refis. And I'm like, I don't like that too much. Just worrying, looking at the big picture of the economy, that means people are tight, right?
Or people have overextended and they're trying to
Mhm.
figure out how to consolidate.
Well, isn't that tight?
Yeah, sure.
Yeah,
So
one way or another, it
Yeah.
is. Yes.
So, first of all, just because I heard that from one person doesn't mean that's a trend. Are you seeing that at all right now, that you're seeing a lot of people trying to get money from the equity of the house right now?
I don't know, but a lot is the right word, but certainly more than, the people see rates dropping,
Mhm.
or maybe even they have substantial, like, you start to get to 1 point less and people start getting ideas about refi.
Yeah.
And when they say that, well, cash out is another, it's just like a natural progression on that. So I would say the kind of the headlines are driving the thought processes, which say, hey, is there something there for me? So yeah, the phone is ringing more, and I'm having more cash out
Now,
conversation.
with the cash out people, the ones that you're having the conversations with, do they tell you what they're probably want to use the money for?
Oh yeah, I would say mostly that
In
would
general,
be
we're
debt
talking in
consolidation, but
debt
you know,
consolidation, so paying off credit card debt and stuff like that?
yeah, I think so. Mostly revolving credit. Someone tries to tell me they want to pay off a car, I'll try and talk them out of it.
Mhm,
Generally,
mhm. Is that why would that be?
because you're stretching it. Usually, you're stretching like your
Oh,
car loan's like a
yeah, it's
5-year
only
loan,
5-year
and you're going to
loan,
stretch
and
it over
that
30
makes
years.
sense.
That's great for lowering kind of the payment, but holy cow, you're paying a lot for that
Mhm.
car
A lot.
over time. And you're paying for it probably long after you don't have the car.
So, with the cash out refi, the only money that you can get is you have to have at least 20% equity,
Yeah.
right? You have to have at least 20% equity, but can you take any money from that 20%, or it has to be past that 20% level? Do you know what I mean?
No.
Like you have to have 30% equity and you can get 10% of it, but the 20%, they're not going to put that in as part of the cash refi.
Uh,
Your
yeah,
your
I hear what you're
100
saying. So the way I think about it is like just take the value of your home.
Mhm,
You can get a new loan up to 80% of that,
mhm.
and that 80% number has to be enough to pay off your existing loan and then consolidate whatever debt, and then you might have some left over to for projects or
Right.
whatever.
So if you just barely have the 20% equity, you're probably not doing a cash out refi.
Yeah, you
That's
don't
what
have
I'm trying
enough.
to
Yeah,
get
you
to.
might not even have enough to roll in your closing costs on the loan. So you want to
Right.
be able to pay off the existing loan,
Mhm.
roll in costs. You don't want to come
Mhm.
out of pocket, obviously, on a cash out. Like cash is what you're after, and then you have enough. You want to have enough left over to do whatever you do as far as consolidation or projects. Or somebody mentioned, pulling cash out to buy an investment properties.
Yeah,
That's certainly a
thank you, PF.
possibility.
Yeah, so that's the other thing. You're not seeing people like doing it back in the day when Countrywide was around and they're like, hey, go take your equity and go buy a Lamborghini, or go take your equity and go to Europe for a month. You
No,
remember
I'm not
those?
seeing that.
Remember those? You're not seeing
I'm
that,
not
right?
seeing that. I
'Cause
feel like
did see that
some
billboard.
people have made me wizened up on stuff like that. I don't
Yeah.
know, but also we haven't. Even though we have home values that are high, I don't know that we're having. I don't know. Like I feel like in the early 2000s, it was almost like every month your equity's increasing a lot, and it was like, oh, pull it out, tap into your equity. So there was a lot of that style of your home value is going to increase forever type mentality.
Right.
So leverage it. So I think people have
So-
wisened up off of that.
So many of the people that are really, really sweetheart equity position have like a 4 in their first number, 3 in their first number. So to refi into where they're at now is
Would
probably
be a desperation.
tough.
mode.
Yeah,
Yeah.
that is a tough one, right?
And I talked to some I've always had these conversations, but it's
Not
like,
to say
okay,
that
so you
people
have
with 5.
equity
Yeah.
and you want to tap into it for whatever reason. What are the mechanisms for doing that? Well, selling the home is one mechanism. Cash out refinance is another one, but there's also home equity products. So a second loan, which, Jimothy and I talked about. I think you did that at some point on your previous home, and it was the right decision versus a cash out. Cash outs cost money, guys. Home equity products, not so much, right? Closing costs are relatively low. Rates are usually adjustable. They're probably the payment term is shorter. It's not a 30-year. So, but you just need to talk to somebody who kind of thinks about this stuff and has this information and can give you good advice. Or, like you said, Johnny, if you really just want to do it, I'm able to do it too. Even if it may not, make the
Doesn't
most
make
sense
all
to
the
me.
sense.
To me,
Right.
but
right.
I'm not the one making the call.
Although you got to love these moments when Mike says your best option is to do the home equity.
Yeah, something I can't,
something that you
Right.
can't really do for him.
Right.
That's when you're like, man, that dude is awesome.
It's like he doesn't like me or what?
Yeah.
Like, no, I
Just
like
trying
you
to
a
get
lot.
me
That's
out of
right.
here.
This is how much I like you.
Yeah,
Yeah.
go do something I can't do for you.
He did that for me, not once but twice.
Yep.
Yeah, me
It's
too,
really
bro.
important to get the right information and to go to somebody that isn't trying to work for their best interest, but working for your best interest. And, Mike's proven it over and over and over again. There's nothing to debate about that or anything. So,
As we've had
knowledge.
this conversation, this is a weird one, but the math, it could math, and again, it's all about getting with Mike Rauch, mortgage guy from the mortgage firm, or somebody that's really good at what they do. But if you go to floridatalkrealestate.com, We got a team of pros for you, the one-stop real estate shop. What if I'm just going to use my house as an example because I think it's a good one. So I'm around, like, I think we owe like 240 or something like that.
Okay.
All right.
Mm-hmm.
And I bet you we get, just based on what we've heard about the neighborhood lately, it was probably at least twice as much on the sale of that house, probably with a 5 in the first number.
Mm-hmm.
But I refied a handful of years ago. So, my term, right? I'm around probably 25 years.
Yeah.
Does the math kind of settle in to maybe refi into a 15? Like, what does that do to your mortgage payment for somebody who's like, man, I got a great equity position, but my term's long. Can you utilize your equity to get into a shorter loan? Does that affect it at all?
I mean, equity position shouldn't matter as long as you have sufficient, you're not like upside down on it.
So it doesn't benefit you necessarily.
I just go back to the simple thing. Does it cost you anything?
Because it would.
Whether you're coming out of pocket or tacking onto your principal, is there any cost whatsoever? If there's any cost whatsoever, there's a break-even period, right? When you switch from a 30-year payment to a 15-year payment, the goals are completely different. So your payment's not going down really. So then you just start calculating interest savings over the time that you're going to remain in the home. But I would say this, almost invariably, if you're selling your home soon, you don't incur anything that costs money. So you don't do a refinance in your case if you're going to sell it within the next whatever. But you can do some sort of break-even math. It's hard when you're converting to a 15.
Yeah.
But your savings are going to be over the long term, not the near term.
So it's hard to make that make sense then.
I can't imagine a scenario where it makes sense unless the cost is zero.
And it
just doesn't happen.
It doesn't happen.
When you do a refinance, people are like, well, why does it cost money? You have the same kind of 3 entities involved, the cost center. So when you do a loan, real estate purchase, whether purchase or refinance, you've got lender related fees, you've got a settlement company that is closing the transaction, they have fees, and you got the county or the government.
Mm-hmm.
Those 3 cost centers exist on a refinance and a purchase. So to do it with no cost, like you remember there was I'll cover your closing costs type of refinance. Well, guess what? Those costs exist. Who's paying for them is the question. So when you have like the lender covering your closing costs, well, guess what? The only way that they have that money is based on the interest rate that they offer. The interest rate doing that sort of gimmick is not the same as it would be if you didn't have the gimmick, right? So your rate's going to be higher. So it's one of those things. Those costs exist. When you do a refinance, basically there's cost.
Right.
You can't do it for zero cost typically. But if you could,
it is much less so than an initial purchase, correct? I mean, you don't need a land survey. There's certain things that you don't need. Title, you have to do a title search.
So
on a refi.
Yeah, I would say it's not that much less, Jimothy. It's probably it's the difference. You might be surprised. Like
fairly negligible.
The costs are similar.
Okay.
Costs are similar.
Mm-hmm.
Some things that you're not going to have, like you don't have to re-record a deed, right? So that's sometimes a tax cost, right? Yeah. But I would say it's not as much as you would think.
Right. Okay.
Let's go ahead and take a break. And then on the flip side, Johnny, we're going to talk to Ross about what's going on in the insurance market right now, which is really important consideration, not just for people buying, but people living in houses. So we're going to talk about that a little bit. Then we're going to talk about a bubble that's happening in Florida right now. It's the exact area I predicted when I came back from that vacation. I called it vacation. When I went to Vegas for, what the hell?
Super Bowl?
Family reunion, the Keller Williams family reunion, the national conference. I said, I think I found the first little bubble that's going to pop.
I remember talking about it. There's a town on the West Coast.
Yep. And now it's coming out where they got some stats proving what they were saying in February is true. So we're going to talk about, have we hit our peak yet? But first, we're going to talk insurance because everybody needs to know what's going on with that.
All right, perfect. So we still got plenty of time remaining. And of course, you are always welcome to join us. Quick break, 4-minute reset. If you'd like to jump on right now, go ahead and do that. Jimothy's got some nice Hors d'Oeuvres over there for you to make you a little coffee or something in the morning. 877-927-6969.
Danish. I want a little raspberry Danish.
That sounds delicious.
That sounds good.
Yeah. Did you like all the frosting off? Like the last one?
No. I like to. Yeah.
877-927-6969. I got Mike Rouse.
What did I miss?
He was texting.
Sorry, what did I miss?
Now he's back with
I
us.
heard frosting and licking. Yikes.
Remember, Florida Talk Real Estate is .com, your one-stop real estate shop. If you're not comfortable on the radio, you have access to the entire team. Pros. You get them all at FloridaTalkRealEstate.com. We got a 4-minute reset and another full hour remaining for you. Thanks for being with us, whether you're listening, watching, maybe doing both. Hopefully, if you're watching, you are doing both. And if you're on the radio watching us, that is weird. If you're pulling that
I
off,
want to know how you do that.
Yeah, you got to call and tell us how you're pulling that off.
I was just listening to a podcast there with talking about Neuralink.
Oh
Nice.
yeah, Elon
So
Musk.
there may be some mechanism for listening or for watching the radio
Wow.
via what they're doing.
Interesting.
Yeah.
That sounds
Yeah.
like a world I want to live in.
You read much on that thing, that Neuralink?
Just not read. Just
what
listen.
what it's going to be able to do for people with handicaps is
sure.
just unbelievable.
Absolutely.
The potential that is there is remarkable.
Yep.
No
Mhm.
doubt. As freaky as
We
that
should
is.
talk about that in the next segment.
Right.
Yeah.
Oh, all right. Tie that in.
And how it relates to real estate. Don't worry, guy. I'm going to send you my refi analysis. Boop.
Yeah.
And it's like,
There you go.
oh, I got it. I get it.
Just blink
I
twice
just
for me.
calculated my break-even point.
Thanks, Mike. FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. We're back in 4 minutes. Great to have you with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter. Here's what's happening with the weather on Real Radio.
From the Gordon Partners Weather Center, have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Charlotte Carl. Rain chances remain very isolated throughout the day today. Only about a 10 to 20% chance of a stray shower making it onshore and then potentially developing a bit stronger of a storm as it pushes inland. But again, very low because we have lower moisture in the area, low humidity today. Feels like temperatures only getting into the mid-90s this afternoon.
This report is sponsored by Allstate. Some people just know the best rate for you is a rate based on you with Allstate, not one based on anyone else. So if you drive safely, you could save money. Good to know. Visit allstate.com or call for a quote today.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, 877-927-6969. Same number, just from a different voice. Maybe it hits a little differently. You're welcome to join us with your questions, comments, concerns in the world of real estate. Us, that's me, Johnny C. Our producer extraordinaire, Jimothy, of course.
Good morning, gentlemen.
Good morning, my brother. Locker room going to be cranking up in about an hour from now?
Yeah, about an hour from now. We'll talk a little bit of sports. I think got a little pigskin going on right now.
I might have to pick a brain real quick on my way out of here. I have my very first fantasy draft today.
Oh, cool.
And your boy's picking first overall.
This is for football?
Really?
Yeah, fantasy
Or
football.
for Premier League?
Fantasy.
Oh,
Yeah,
okay.
Premier League,
Yeah.
exactly.
Okay.
Yeah, no, fantasy football, my very first. I do a couple of money leagues. This is my first one. And I landed the first overall.
Wow.
And I am torn.
Struggling?
Still torn. Yeah. I'm not quite sure where I'm going yet.
I would go with Rams defense. For
First,
number
Really?
one.
I was thinking kicker. I was leaning into kicker. Yeah, I am torn. I might go Bijan Robinson. I might. Man, I am torn. To not say Christian.
Should I ask
I'm not
ChatGPT?
gonna put the name out
Well,
there.
the question is how's scoring, right? Because that matters.
So it's PPR,
Right.
Full PPR. Yeah. So yeah, if it feels weird not even just jump right on a McCaffrey if you can. Right. But man, strained calf out the gates, like that doesn't heal this year.
Oh,
I don't know.
I didn't hear about that.
Oh man,
All right.
I'm struggling. Anyway, let's get to the real reason we're here. Like Ross Komarinetz, Brightway Insurance, Juno Beach. His expertise is one of the reasons you tune in every Saturday. Nice to see you, my friend.
Nice to see you. Not about fantasy football, though.
No,
I
I'm
mean,
not.
I'm so out of touch. I didn't even know
You would-
Bijou
You
Robinson.
would tell me to get like Jameis Winston or something.
He's not good.
Of course he is.
Oh.
Yeah, Jabu's the man. Just not in fantasy football. Yeah, he wants stats. Yeah.
Well, in
Mark
in
Rittman,
my
if I got-
in my fantasy football, he's
Yeah.
still the best.
He's holding up crystal trophies,
yeah,
kissing crab legs.
yeah,
Yeah, he's the man.
that's right.
What does it tell me to do, Mike? No, just tell me. What's it?
You're going to have to do
It
that.
says to do Christian McCaffrey. Then Eckler. What year are you drafting? No, Eckler's a commander now. There's no way I'm drafting that dude.
Fourth was your guy.
Bijan's fourth.
Bijan's fourth.
There's no way I'm drafting Austin Eckler. If I had to, I still wouldn't. I can't root for the Washington Commanders.
Eckler's another player who excels in both run and pass game, making
does.
him
He's
a PPR,
beast.
points per reception monster.
He is a monster. Yeah, this might be his last year in fantasy monster style too. But
Oh.
I'm not drafting him. I don't care if I have to.
Even if
I don't know
just-
who that
just-
guy is either.
McCaffrey.
I'm gonna ask Ross. who to draft.
Tyreek Hill, number 3.
So Tyreek Hill's one of my options for sure. Yep. But McCaffrey's like the obvious choice.
You know, is number 2 when I do a search.
Who is?
Lamb.
So CD's not signed, brother. If he was
Mhm.
signed right now, I might take Lamb. So
What about like a Jerry Rice or something?
well, when you're talking about goats, I have the first pick, so I could take the goat if I wanted to.
Yeah, I think that'd be a good
I
pick.
take whoever I want. I might say,
I got one for you.
who you got?
I asked her for some dark horse picks. Number one dark horse, Tony Pollard, Cowboys.
Oh, he's not a Cowboy. He's a Titan.
Oh, geez.
Yeah.
So I need to update.
I would hit refresh.
I need to get
To
the latest.
21st
So that's not a
century.
good pick.
It could be a good pick, but number one overall,
I
that
need
would
to ask
be,
Chat Johnny.
that's dark horse. For
Okay.
sure.
Super dark.
There it is. Mike Rauch, the mortgage guy from
Hi.
the mortgage firm. Nice to see you as always, my friend.
Yeah.
Thanks for
I
jumping
get-
on and trying to help me. I
guarantee I would be getting my fantasy draft picks from AI right now. And so I'd be making a mistake.
I would probably just pull McCaffrey, just do it. Be like, well, if the calf's blown, the calf's blown. It is
Yeah.
what it is.
Yeah. You wouldn't be the first one to be wrong.
Oh, no. And it wouldn't be the first time I crapped the bed on the first overall pick. Jim DePaul is with us too. I've told you for 12 plus years now. Jimmy D, he's going to tell me who to pick first overall here in a second. He runs a top producing Keller Williams team, Keller Williams Innovations, the Florida Home Pros team. Jimmy D, who you be? It's Tyreek Hill, huh? It's Tyreek.
Hey, I would do the Tyreek.
You're going Cheetah.
I'm going to.
All right.
Yeah.
I had a feeling.
You know, I was watching.
Cheetah's right over your shoulder too. It could be a sign.
I was watching
right over your shoulder.
Mostert talking about who's the fastest on the team, and Tyreek was like the fourth person in the
I think
group.
Mostert feels like he's probably faster.
But he said
H-Chan's
he said
blazing
that they're
speed.
actually doing that GPS tracking on the field during practice.
Oh, so they know.
See, right. So they're saying it's him, some new guy Bonner or something like that.
Okay.
A new guy, and I knew all these, and now I'm having a brain fart.
Is it H-Chan? That dude's a
Achan,
Yeah, he's a
and of
blazer.
course Waddle, and a new guy. Is it Jalen Williams or something? Jalen something, but not Waddle.
super fast.
Yeah, the
Yeah.
super fast guy.
Mark Duper?
Yeah,
Is he
Mark
still-
Duper. And then
Clayton
and
still in
then-
there?
Clayton.
right? No, that
Darryl Green?
Warfield. And then they mentioned. Then he mentioned Tyreek, but it was like the fifth guy, and I'm like, really?
Huh.
He's the fifth guy?
Yeah.
Right. He didn't say in order, though, to be fair. He didn't say in order. He just said these are the guys that are on the list on the board all the time.
Well, and it's the only ones that's the highest that they've tracked while they're tracking
when
on
they're
the
running
field.
around.
Right. Yeah.
Yeah.
So I wonder if it was just a flat out race. Who would win, though.
Yeah, that's what I'd like to do. See, just to have a relay and to see what happens.
Right.
They're even tracking now the O line and D line for speed. That guy is just a speed monster. That McDaniels guy. That's all he wants is speed. Right.
Yeah.
I'm not saying it's a bad thing necessarily,
Hey,
but
speed kills.
yeah, he's like even tracking the O line and D line and how fast those guys are. Okay, so I wanted to get into insurance a little bit because everybody's complaining about insurance. And while there's a lot to complain about over the years, it is getting better. And people aren't really realizing that yet. I don't know what it's going to take for them to do that, but whatever. Okay, a couple things I didn't know, Ross. You know, like last year when those companies went out of business, a lot of them pulled out. They went bankrupt. They went insolvent. We still have 167. I'm sorry, I got the hiccups. We have 167 companies that are still insuring properties in Florida. I didn't know that.
That sounds like
didn't
a
know
lot
why.
to me. I thought there was one.
Yeah, I just read it now. I know, right?
Well, there's like three.
100
There's
and
three.
I'd love to see that list.
It says the Lake Mary-based company is the new company that's coming into Florida is called Trident Reciprocal Exchange. And it says it has been approved to write homeowners policies in Florida. The office's insurance regulation says that Trident Reciprocal is the 9th new insurance company to join the total marketplace of 167 companies permitted by state officials to do business in Florida.
Oh, permitted.
Oh, permitted to do business.
So I say maybe you're missing.
Okay.
Are you missing a decimal?
Well,
in there?
wait,
Are they
why
saying
are we
Okay, I mean, you can be
16.7?
permitted to do business
Well, why would you be permitted and then not do the business here?
because it doesn't make financial sense. Like, okay, so like a state farm and an Allstate,
Mm-hmm.
they're permitted to do business here and offer
okay.
coverage, but they don't really,
okay,
or
so that
take
part-
like a
Ross, I'm trying
nationwide.
to say good things about what's happening in the insurance
Well,
company.
no,
Now
things
you're
are
giving me rally
things
checks.
are good, but the
That's not a
167
great example.
That's
companies.
not a good example,
Yeah.
exactly.
Yeah.
So wow.
Of the 167 that are allowed to write here, how
One.
many are actually writing?
One.
Yeah, that's
Okay. So
because I would even think the ones that went insolvent were allowed to write here, right?
Still,
Yeah.
Yeah.
sure. Well, maybe not.
Maybe not anymore.
Yeah.
Yeah.
or maybe some of those companies that were still solvent and just chose not to.
Yeah. can't
You
do
know,
it.
hey, we're just not going to
gonna do
offer
it.
coverage. They're still permitted to offer coverage here,
Choosing not to.
but they just choose.
I would
not to.
if they had a chart like Freddie's chart, I think you would see premiums stable at the very least, if not coming down, and options increasing versus decreasing. So
yeah, we're seeing more options. I'm able to shop and save money, and save money as it's getting better. Rates are coming down. They're a lot more stable. Carriers are opening up. We got more carriers offering new business than we had in the last 2 years. And I think some of them are trying to offer, trying to make their rates competitive. They're starting to come out with programs where, okay, hey, you get on homeowners insurance. You never really saw this, but hey, if you get an early signing discount, right? So if you bind your policy more than 7, you give me money today, your policy is effective, 7 to 10 days from now. That's an early signing discount. They're doing a lot of carriers are your current carrier may offer a discount for an automatic water shutoff valve. And depending on the carrier, it could be pretty significant. And they'll pay for the installation, and it'll cost you like $10 a month.
Wow.
And you'll save more than that. So they're starting to try and bring work with the consumers to bring the carrier or to bring the premiums down some. So
yeah, there's a novel idea. Let's stop the pipe burst problem before it's a problem.
Exactly.
I like that. Ross, it's kind of, this is almost in the vein of the refinance conversation. And I brought it up briefly, which is like, if budget is first and foremost, like, hey, we're tight, we just need to cut corners where we can. Refinance people talk about that, and then we say, well, what's the cost and the break even? Is there similar thing with insurance? Like, is there cost to do it? Can I do it anytime? Is there some sort of break even math, or is it just like, if you can get a better policy, pull the trigger on a better policy?
Yeah, absolutely. I mean, if you think you're paying too much, you can always shop it. I mean, if you shopped it last month, probably nothing has changed since then, but 6 to 8 months ago, things may have changed. We've got more carriers since then. And if you can shop at any time, and if you've got a better policy, yeah, you can switch anytime. You get a prorated refund of the unused portion of your current premium. So you don't really lose any money. You immediately start saving.
So that I was going to ask about that proration part. So the stuff that you haven't used yet, do you get 100% of that back, or do they take some of it as a fee, like canceling early stuff?
There's no like cancellation fee. Now the carrier may have like $100 policy fee that they charge that isn't refundable, but the general premium is going to be refundable, prorated. So, and then you can do an escrow analysis with your mortgage company right then and there, and adjust your mortgage payment and start saving some money right away.
Matter of fact, you have to do that if you want to see those savings, right? So let's say you're mid policy, 6 months in, your insurance is dropping by $150 a month. If you don't talk, and your taxes and insurance are escrowed in your mortgage payment, you have to get your lender involved to say, hey, listen, we can collect less now for the insurance because my premium came in lower. I forget if they pay it up. I don't know. Typically, you just got to call your lender and
so typically what happens, we write a new policy, we send the proof of insurance and invoice to you, the bank. The bank goes ahead and pays it. Now we have an escrow shortage, right?
Okay.
But we're going to get a refund from the old company. And then when you get that refund, you want to get it back to your mortgage company. And when they have it, that's when you want to call them and say, hey, I just lowered my rate, my insurance premium. I want to do an escrow analysis to try and lower my mortgage payment.
So you're going to get that check in the mail. The prorated refund come to you. You should have that moment, Johnny.
Yes.
You're going to have the devil on one shoulder and the angel on the other.
That's it.
You're like,
yeah, but you've already received that escrow shortage letter. Probably.
Yeah.
So you're gonna pay it. You're either gonna
pay it
with that check that's in your hand, or you're gonna pay it every month.
You're gonna like the way you look.
Right.
Yeah, they're gonna adjust it the wrong way.
Yeah.
I want to talk about that in a second, because we had a rookie agent call me about something that I thought was really interesting, that she wasn't telling her buyer that the buyer needed to know. But before that, I wanted to ask Ross, continuing on the insurance stuff. One of the things that I read about in this article, now I'm a little concerned because, the 167 companies is a little misleading. But they're saying that because of what they did to try to do that, what do you call that when you're pushing the people out
Depopulation.
Depopulation, when they're depopulating citizens, they've already saved about $65 billion in liability for those policies by pushing them off to private companies.
How much?
65 billion.
Billion?
Insured money has been transferred from citizens to
Premium
other
dollars
companies.
or like coverage?
It says,
Because when you factor, I mean, I guess that sounds like a big number, but I guess if you're factoring,
oh, this is commercial.
okay,
The OIR also noted that commercial lines have reduced the liability of citizens' property insurance by nearly $65 billion. That's just the commercial line, not the
The
residential.
liability.
Liability, right?
coverage,
Just the
yeah.
liability.
so but I mean that could be, I mean, what's your liability? That your total coverage that you're on the hook for?
Yeah.
So I mean that's a big number, right? So that includes the actual dwelling itself. Well, in order to
Contents, everything. Right?
contents,
Everything.
and then typically
Right.
you've got $1 million, or not on citizens. I don't, but you've got the actual like liability if you're sued. So
Mhm.
maybe the sum of all those coverages. Right?
But that was commercial, you said?
Yeah, it was
No.
that
It's
was
the commercial lines. That's not commercial coverage. That's well, maybe Ross.
Well,
can
Citizens
explain.
does commercial, so they have a commercial
They have commercial
line
too.
as well.
I thought he meant it was unloading to the I forget what you call them.
Oh, Depop?
Ross.
Yeah, the
No.
depopulation.
No, but not the commercial. They're depopulating to your, like, what's the insurance that you go to if you can't find insurance?
Citizens.
No.
The excess and surplus.
Yeah, the
Oh,
excess and
excess
surplus.
surplus,
Maybe
yeah.
it's those carriers they're talking about.
The other thing that I saw in this article that reminded me of stuff we talked about in the past. Remember when Demotech was the company that kind of rates the insurance companies to make sure that they're rated properly,
Okay, yeah.
so that mortgage companies feel comfortable with the insurance that you're selecting is going to be able to perform if you have a problem with your house. Well, our great legislators here in this state, they decided when they were having a problem that Demotech was being, quote, too tough on the ratings, they decided that they were going to create a new rating system, which makes me funny. It's like, if we can't make 2 + 2 = 4, we're just going to create a whole new math.
We'll change
right?
the
We'll
math.
create the math. Right?
You
We'll
just start
change the
grading
math.
them on a curve a little bit.
Yeah.
A little bit of a curve.
Well, they did it.
Bring them all up.
I
here.
thought that was just talk. They did it. They created a new rating. You're using a different rating agency now, called Kroll, Kroll.
Heard of them.
Bond rating agency has been added now because they didn't like the results Demotech was giving them on the financial stability of the companies that they're using in
a
Florida.
little too real.
So we'll see if Kroll is really going to be the real ones if we ever get in trouble. I just thought that was funny. And that has nothing to do with the insurance industry. It has to do with the way the legislators are controlling
Right.
the insurance industry.
Well, it's hard to rate an insurance. So, over the last 4 years was kind of crazy, right? The insurance companies can underwrite and determine rates for hurricanes, fires, plumbing leaks, and things like that. But what they can't underwrite for is having to pay attorney's fees.
Right.
Right.
Yep. That makes sense.
all those companies, they were probably fine should, operating in a regular environment where the disaster, claims are kind of normal, but, nobody could just, they couldn't, they didn't have enough cash, to pay all those, settlements and lawsuits. And that's why the companies that were able to stay in business had those huge rate increases, because they had to now kind of backwards account for, hey, we have to take into account that we could be sued every single, day and pay all these fees. So, but since that legislation has passed and those have started to come down, we're starting to see those companies now drop their rates.
Yeah, I don't think it was any big surprise that, curtailing the excessive litigation would be beneficial. And it's one of the counter arguments was, well, this is going to make it harder for homeowners to make claims, legitimate claims, the process for getting those things. I haven't heard anything about that becoming more difficult for people making claims. If anything, it's the opposite, right? Like they just have more resources now to go towards regular claims and not frivolous, or fraudulent.
I mean, I haven't had
lawsuit.
anybody call me and say, "Hey, I filed a claim with so and so, and it's not going well. Nobody's getting back to me. They're being denied." And
I mean, they're still going to put you through the ringer. Like that's what I tell people about the mortgage process. Like it's going to be painful a little bit, but we try to make it as pain-free as possible. So you're still going to have to go through insurance claims process, but
especially if you're working with people that help you and know what they're doing, and it's going to be as pain-free as possible.
But it does look like what they did in the legislature,
it's
is
impacting,
working out.
And I mean,
so
we've
far
actually
it's
seen
impacting the way that they were hoping it would.
Yeah.
2 new carriers actually start to offer new coverage.
Nice.
We've seen new carriers that are actually starting to offer new coverage.
You know what worries me though, because it's just in my world. In the last month, I've answered the door, no exaggeration, 5 times.
Really?
You still do that?
Hey, yeah, exactly. Well, don't you just peek out the window and see what it is?
Nobody's home.
Yeah.
Hey, we've been helping your neighbors. How old is your roof? We can do a free inspection on your roof. We can get you a free roof. And the first one, my wife got a little upset with me because I leaned in on him like, you're a bleep, scammer, bleeper.
Oh,
yeah.
wow.
She's like, no, please don't do that. So the next few, I just kind of, hey, I'm good. Thank you.
Yeah. Good luck to you.
Yeah. But 5 times in the last month, like different people. It might be the same company. I should grab their literature to find out who they are. But yeah. Hey, how old are you? We can do a free inspection. We can get you a free roof replacement. I'm like, oh my gosh.
This is great. You could
cranking
you
up
answer
again?
with like a clipboard. And you're like, oh, yeah, I'd love to collect some I'm actually gathering information about you guys. So you got a few minutes for me?
And I should shift my approach on that.
Right?
I should be more of a information gathering.
You could start a website and be like,
well, it sucks because
something.
what do you mean get me a free roof? How do we did this before?
Roofs
you
are free.
Scam artists. What are we doing?
But there's a lot of people that answer that door and they're like, oh, I might have damage still.
Oh, my neighbor did, huh? Yeah,
And
free inspection.
My
Give me a
cars
free
were
roof?
fine during that hailstorm,
Yeah.
but it devastated my roof. That's crazy. That is nuts.
Oh,
So that's still happening, huh?
and
Interesting.
And brother, it's happened a lot in the last month.
Wow.
It might have been, maybe it's that we pocket of rain we get that cranks them up. I don't know.
Yeah.
I don't know.
Yeah, I
Loophole?
don't.
I'm not getting the mail
crazy.
anymore,
Yeah.
but I'm
Because
getting,
you haven't been answering it, but you will answer your door.
yeah, exactly. Mailbox is full.
So I wanted to
So that's not helpful by any stretch, I'm sure.
No, but I also think it's probably a tougher environment on their side of it now.
Good. I'd like to think so.
Well, the one thing is like also just lead generation can still be the same process, even if the results of that lead gen is less and less
Sure.
business for them, right?
There's
So
no
they could,
fishing, but
yeah, they use the same mechanism to get you to, pick up the phone or, sign into some sort of the next step in the process, but maybe it just doesn't result in a free roof as much as it could have in the past.
And they can still file those claims, but the homeowner has to have some skin in the game now.
Yes.
Correct?
That's right.
I mean,
Yeah.
as far as litigation,
Well,
So
not
as far as
really,
litigation,
yeah.
if they
As
were,
far as
if it
lawsuit,
was
yeah.
denied and they wanted to sue the insurance company, then yeah, they would have to have the skin in the game.
Right.
Yeah.
Mhm.
But it's still like a lottery of, maybe they'll approve it. Maybe they'll send somebody out and it'll approve it and I'll get a new roof.
we got a
wanna
call
take
there?
we want to take a phone call.
You want to do that, Jimmy?
So we got Jay on the line. He has a mortgage question. Jay, welcome to Florida Talk Real Estate.
Hey, good morning, Jay. How are you?
Hi.
Well, good morning. Well, you're on the radio, my friend. How are you today?
Oh, thank you. I'd like to have an example of an assumable mortgage on the radio. Can you show how that works?
An assumable mortgage. Yeah, I bet we can probably explain that a little bit. Are
Hey,
you in
Jay.
a situation, Jay, where you're going to be trying to work with an assumable mortgage?
Or maybe pick one up.
No, I just heard from a friend of mine that he sell his house, and he know how it was, how it would work for a mortgage.
So the way that it works, Jay, is and tell me if I'm correct about this, Mike, but I only know of FHA and VA and written at certain years and newer, right? I think you go back, I don't know, about 10 years or so, roughly, and newer. are allowed to be assumable. Regular conventional loans, I don't know of any assumability in regular conventional. Am I correct about that so far?
Yeah, I don't know
Okay.
about the 10 years thing, but yeah, generally FHA and VA loans, you could consider them assumable.
It's when they raised the PMI for
Right.
FHA. When they raised the PMI, they as a benefit they made the mortgages assumable to make it more palatable to the buyer, to the consumer. However, here's the way it works in real life. I was very excited about these assumable loans because when the interest rates started going up, I wanted to use the assumability loans as a really great way to
Marketing.
get property sold.
Yeah.
And a great way to help people. But this is what I found out in real life. Unless you have a buyer that's willing to make up the difference. So let's say that you owe $300,000 on the house and you got a 3.5% interest rate, but you're selling the house for $600,000.
Yes.
In order to do that the correct way to make it the easiest, you need to find a buyer who's willing to pay the $300,000 for the $600,000 price and then take over your $300,000 mortgage.
Yes.
If you don't do that, the other way to do it is to take out the first mortgage, which would be assumable, which would be the $300,000 mortgage in existence. And then you would have to take a second mortgage out to make up the difference. When you do that, what I found is every mortgage company, every time, not Mike, but every time I've had buyers and I'm trying to sell my house assumable, the buyer's agent comes back and says, they're just going to buy it regular because there's no benefit in assuming the mortgage. And I'm like, what are you talking about? It's at 3.5%. Today's interest rate is 6.5%. Well, the second mortgage, the
Isn't
interest
6.5.
rates are so high, much higher than the prevailing rate today that it strips out the assumability.
But that's isn't that the way it kind of always was laid out?
Well, no, back in the day, Johnny, it was very common. Like when I bought a house in the 90s, a lot of times you took out a first and a second. I don't remember why I did that, but a lot of times people were doing an 80% loan and
exactly
a 20%
why you do it.
loan.
No, that's what you do. So your first loan doesn't have mortgage insurance and you're getting help with you don't have 20% down, but you can borrow. Maybe you're borrowing 10% of that and you bring up the other 10%. So you got first loan with no MI, second loan. Yeah, it's whatever interest rate, maybe a little bit higher than your first, but less than what you'd be doing on your MI.
And that was a very common way to buy houses back then, where you took out two mortgages at one time.
But that's one of the options for the assumability, right?
Yeah,
Is
but
to have
the
two,
interest
but
rates strip it all out.
Of course, well, it's all going to be a math game, but it's isn't that the way the assumable loan always works though? You're either going to do two mortgages or you're going to pay the difference and assume the loan.
Or you buy the house at what's owed on the first. So if you wanted to, so for example, sell to a friend or family member or something like that, and you don't really care about the profit or the proceeds, and you just want to, transfer a loan essentially. But they do have to qualify. So for like a VA loan, in order for that to be assumable, the new buyer has to be VA eligible.
Sure.
FHA have to be eligible for FHA. There's not too many requirements there, but there may be
minimum
some
requirement, right? I mean,
yeah, you got to meet the requirement to qualify for the loan.
So
type.
even with the VA, you have to be a VA qualified candidate.
You can only assume a VA loan if you're eligible for VA loan.
Oh, I didn't know that. I thought anybody could assume the VA loan once you did it. I heard, though, that the VA, so that's incorrect. But I heard that if you did do that and somebody assumed your VA benefits, you couldn't use your VA benefits until that mortgage was taken care of. Is that
no,
correct?
there's you can get it restored.
Oh, you can still do it?
Yep.
Yeah. So Jay, that's the kind of way it's working in the real world. Do you have any other questions?
No, you guys did a wonderful job in explaining that. I'll convey that to my friend.
Perfect.
Yeah, that's awesome. That's a very common question in today's market.
Sure.
Is that
because it sounds really good? Like
it really bums me out. I was so bummed out when they went to did the assumable. I think it was like 2017, 2016. I was like, I'm going to use that when the interest rates go high. I'm going to be one of the guys using that as a tool in my toolbox.
I think you still should, Jim. And the reason is, let's say somebody does have that 4% or 3.5% or 2.5%,
which I saw recently.
If let's say I got enough money, right? $300,000 loan amount that I can assume I got to come up with $300,000. Let's say I had $600K to buy the thing. Well, there are plenty of people who would take that $300,000 loan at 2.5%.
That's right.
Keep their $300,000 and do something else with it. You can even put it in a high yield savings right now that's probably close to 5%.
Exactly.
So if you're in that world, people will take that all day long.
Yeah.
Now, FHA, there's also mortgage insurance, which is probably a component of, but that's okay because you might be 3.5% plus the MI. Maybe you're running at like 4% or 4.05%. So if you've got the money to do it, but you're looking for a super cheap money because you can do better in the markets all day long. So I would definitely, if you're a seller and you have an existing FHA loan or a VA loan, I 100% would say, hey, this is an assumable mortgage. Your buyer should at least take a look at it. But of course, they got to have the money. That's biggest criteria.
And we do, but that's the biggest thing. You got to find the buyer with the money. That's what I learned about that.
That's it.
So, and that really reduces the net, the size of the net that you're casting to get your people. But when you could do it, it's great. And it's great for both sides. It really works out well for both sides.
So, Jay, we appreciate you being there, my friend. And you have a good rest of your weekend. I think he's gone.
I was going to say, you may consider, if you're not eligible for a VA loan, you might consider joining the service, but there's minimum service requirements before you're eligible. Okay. So we should talk before you make that decision in order to assume a VA loan.
Way to think of all of it. You got to think about
some people might be like, hey,
part of the equation.
6 months in the reserves? No, not going to work.
Last week we had AJ Holman from Experienced Appraisers on the show last week, which was great. Thank you, AJ, for coming on the show. I had so many questions, and he helped me out so much with an historic property in Northwood. So thank you for giving me all that research last week.
Nice.
He's awesome, man. He wanted to talk about a subject we didn't get to talk about last week. We'll talk about it again when he comes on, but he's freaking out about the new regulations about commissions being not offered on the MLS anymore. So we talked about this in great detail last week. Today is the day that the official in South Florida regulation is changing. Actually, it's changing for the whole country today. Some parts of Florida implemented this last week and the week before last, but the rest of the country is coming online today. And what does it mean? Buyers now must be in an agreement with the buyer's agent before they can see the property. That agreement has to lay out how much commission that the buyer's agent is asking for and who's going to pay for it. And the other thing that's happening with that is no longer can sellers put on the MLS what the commission that is being offered, if any, by the seller. Now, AJ saying this is going to be a big problem for his industry, the appraisal industry, because they use the commissions as part of a federal mandate criteria to put in their appraisal reports. Commissions are actually considered in the analysis of the appraisals. And because of that, he has no way of finding out what commissions were being offered or closed on because it's not on the MLS anymore.
Do they they don't get a purchase contract or anything, or the appraisers don't?
They'll get the appraisal purchase contract for the deal they're looking at, but all the other properties they're using for comps, that's the problem. All the other properties you're using for comps. Hey, Ross sold a property 3 months ago in this neighborhood. Johnny sold a house 5 months ago from this neighborhood. They're never going to know what the commissions are.
Make me understand why that matters.
He said that,
how does that
commissions are actually a criteria to determine the value of the property somehow. I'm not an expert. I'm not an expert. I think it's because the commissions sometimes...
It's a percentage of the sale.
You sure he was talking commissions and not seller credits?
No, he said commissions.
But you know the sale, so you can just create the percentage.
Well, he gave me this example in real life. Let's say that somebody sold their house super fast. They sold their house super fast and they offered a 4% commission, and another house in the neighborhood offered a 1% commission, and they got a lower price and it took longer to sell.
But with commissions,
that's a consideration.
With commissions being negotiable, why does the commission being paid, how does that affect my appraisal?
Because it affects the value of the house. That's why the lawsuit was won. They're saying that by adding the commissions into the house and baking it in so that the listing agent is asking for a buyer's agent fee before they even put the house on the market, the seller is going to raise their price naturally to make up the difference for the commissions that they're paying.
But the appraisal shouldn't care what they're asking. The appraisal is based on what.
Well, if somebody's offering a 10% commission, right? I'm just throwing it out there. Let's say they're offering a buyer's agent 10% commission.
You can ask well above appraised value. You can ask
right, and what they might do
value.
is they might ask for like this crazy high price to offset the commission, right?
I don't get it.
So
you can't make it. Make
to me,
sense
it
to
does. I'm not really explaining it the way AJ would, but it does make sense to me that the commission does affect the value of the property.
Affects
And
the
that-
sales
But I
price.
mean,
the sales
and then
price,
the
right.
sales prices for closed properties affects
But again,
the comp, right? So what Jim is saying is like if you're a seller, you're valuing, okay, I'm going to walk away with X. Okay, in order to walk away with X,
if
and
I'm
I
being
take in all my costs, including commissions on both sides, I need to sell it for this.
Sure.
And so you drive that, and then when homes close at those, we'll call them elevated prices, not really elevated, but they're taking into account that, then the whole market kind of rises, right? It's like the boat that rises with the water. Now, maybe we put it in the context of seller credit, Johnny, and it will make it clearer for you. So I don't know how commissions have been looked at by appraisers, but I know they do look at seller concessions. And so let's say you've got a sales price and you're offered a $10,000 seller credit. That is
AJ,
one of the
Wait, AJ's on the phone.
All right, let's see if he talks about credits
outside. I
instead
mean
of
to cut
commissions.
you off, but we're short on time.
Let's see if he talks about credits instead of commissions.
Okay, let's see what happens. Let's see what AJ says. I
Experienced
probably screwed
appraisers
everything up. Yeah.
himself, AJ Holman. Hello, and thanks for listening, brother. Thanks
Hey,
for
yeah.
diving right into the conversation.
It's all of it together. We're supposed to not adjust for costs that are reasonable and customary. So if you're in a neighborhood and everybody does, like you said, the seller credits, and it's normal in that neighborhood for there to be a 3% concession paid by the seller, well, then we don't adjust for that on the comps. What I'm saying is that with the new rules, I think a lot of people will put seller credits in there so that the buyers can then use that cash to pay the realtors their commission. So I need to look at all of it.
Explain that last part. That's the part where I have a hard time explaining this, AJ.
What I want to do, what I would love to do in my reports going forward with the new rules, I would love to have a line in the appraisal for commissions and another line for seller credits, and see if the two of those on a normal basis end up being 5% total between the two of them. If they do, that's what we always did for commissions anyway. But if the two of those numbers combined is 8%, okay, well, now it looks like there's some seller credits in there that are above and beyond the normal market.
So the higher the credits, the possibly the less valuable the home is?
For a comp, yes.
Okay.
If I'm buying a home from you and I pay you $1 million, but you hand me $100,000 back, well, then I really just paid $900 for that house, right?
Right.
So it's kind of along those lines. But the whole point is the appraiser, me, I'm supposed to determine what's normal. And everything's about to be abnormal. The only way that I can really track that is to track it. And the only way for me to be able to do that is going to be to call every realtor for every comp I have.
And that's what
Just like the agents
and
have
that's
to do.
what this article says. According to the Realtor magazine, they have this national article. I read it the day after we talked, AJ, about this, where they're saying, hey, realtors, the appraisers don't have any information involving the credits or the commissions. They're going to have to start calling you to get this information because it's the only way they can get it. And please cooperate with the appraisals, right? With the appraisers that call you. Now, AJ, I always answer appraisers' calls. It's always been my policy to always answer appraisers' calls. But I got to tell you that, and you know this because you're in the industry for so long, a lot of realtors have a problem talking to appraisers. I have no idea. They just have an attitude about them, and they don't want to talk to them like they're an enemy against them or something. I'm never like that. I always try to offer information because it gives them the insight that the appraisers need to do an accurate job.
Yeah, as much information as possible.
Do you find that reporters, do you find that agents a lot of times will not pick up the phone, or you have to chase them and they don't want to talk to you? I mean, before
No,
this,
not
before.
anymore. No. But 15, 20 years ago, that was really a problem. But the last 5 or 10 years, I've only had one realtor last year, and he's on my list because he was a jerk about it.
Right.
But it's, oh, you want me to do your job for you? Well, no, I'm trying to do my job. If you could help me get some info, that would be great.
And so I'm just making sure I'm following along. And it's always been this way. The commissions are cooked into the appraised value of your home.
Let me see if I can explain it,
please, because I'm still
Mike wants to explain this so bad.
Yeah, it's listen. So and AJ will jump in. So appraisers have always evaluated seller credits as part of their analysis, their adjustments, right? Of just here's the sales price of a home, then there were adjustments for condition, for square footage, for seller credits, and they're trying to get to a bottom line value or adjustment.
What somebody pays versus what it's worth, though.
So hold on. So they've always evaluated seller credits. Now, and they haven't evaluated commissions specifically. Now AJ is saying commissions are going to be kind of masked as a seller credit. And so is it really the seller credit like we've traditionally analyzed it, or is it something other than that? Is it the commission in the guise of a seller credit? And how does that impact their traditional way of analyzing a seller credit?
Okay, I can see
AJ,
is that from AJ's perspective?
Is that the correct way? AJ, did he say it correctly?
Yep. He explained it better than I could have.
Okay.
Boom.
Okay, so my question.
But it is part of the equation for the appraisal then. So I guess that's something I just never realized.
I didn't realize it either.
The seller credit is because if like everybody's doing it, then it's
I guess I should have realized it because that's appraisals go up as people spend more and more. So it's not that the
well, because a lot of the times, like when you're doing a seller credit, you'll increase the sales price, so you're artificially having a higher comp,
right?
Knowing that the you're going to pay more for that house, knowing you're going to get that X amount of dollars back.
That's the point I want to throw out.
There it is.
Then your house has to appraise for that higher price, or you have a problem, which you always tell the seller. Look, if we raise the price and it doesn't appraise, and you're giving somebody a $5,000 credit, they still might ask for the $5,000 credit if the house doesn't appraise at the value you want.
Okay,
right. And we explain that to him, and then AJ has to say AJ, if the $5,000 was for commission versus a repair to the property or a credit to pay for closing costs, right? Would it make a difference to you on the valuation of the property, what the money's being used for?
Yeah.
Well, this is kind of I would think so. The big thing is, look, we did I know you're saying that we don't normally look at commissions. But I do actually historically, if there's a low sale price and I see that they only offered out 1% commission, or if there's a high sale price and I see that they offered a bonus. It depends on that submarket and what's typical. And that's the thing is all this is going to change around.
So if you saw in that neighborhood, the average commission was 2.5%, but one sold much higher and they were offering a 4% commission, you're going to take that in consideration that it was a higher price and a higher commission. Maybe that's how they got the higher price.
I may, depending if I have enough alternate comps, I may just throw that comp out. I'll mention it and say, hey, there was this sale, but this was a situation and I had better comps.
Yeah.
I mean, isn't that, and then now you're taking into account that the agent pushed that house on somebody versus the one with the lower that only, offered the standard two whatever it was without the bonus. But I feel like the bonus would be baked into the sale. Like that's how much that house is worth. Our buyer just has enough equity that wants to get rid of it, but it's worth this, and he's willing to just get rid of it, give you a little bit more just because he wants to get out.
That's the part that bothers me about the new regulations. The theory behind the new regulations is it's not fair to people. I'm making up numbers here. It's not fair to Mike if he's offering a 2% commission and you're offering a 5% commission. It's not fair to Mike that the agents know that you're offering a 5% commission because they might take they might take more customers to your house than to Mike's house.
Yeah.
And I'm like, yeah, that's the way it works in the real world on everything.
Yeah.
Right. That's just the way it works in the real world.
Why people shop at Aldi
and
instead
the
of
thing
Publix.
is
Also, is like you're just forcing.
Walmart exists for that very
No, but they
reason.
wanted it to
Exactly.
be more transparent, but they made it less transparent. But you're still going to do the same thing because you're going to make the call because you have to know. Listen, guys, if your buyer has to pay commissions, you have to know that from a lending perspective. From how much cash does this person have, and so you have to find out that information, whether or not it's easily accessible or a pain in the butt to get to. You still need it. And AJ's saying the same thing. He needs that information now. He's just got to do a lot of labor.
Now he's got to do a lot, and he's probably not going to get as many. He's not going to get the full response that he wants. It's just human nature. There's going to be a lot of people that aren't going to call him back.
For closed sales on the MLS, do they put the buyer, the seller and
Not
buyer
anymore.
commissions?
And I think they should do that, Ross. They should not. If they don't want to put the commissions while it's active or pending, that's okay. But at the end, when it closes, I think to help everybody, they should put in, this is how the smoke cleared.
The good news is Ross Zillow might decide to do that one day, and then we'll get that information.
Right. If the feds let us do that, so in order to make things more transparent, they covered up a lot of stuff.
Yeah.
This made it harder to get to.
I'm sorry.
The main thing to remember from my perspective is, did it have a market impact? Did the home sell lower or did the home sell higher because of these terms? That's what I'm trying to figure out.
Isn't that impossible to figure out, though? I mean, that's almost impossible to figure out. You're going to connect those dots on your own.
So they kind of jump out at you, honestly.
Do that? I guess that's experience.
Sell so low.
Yeah,
that's the name of the company. Experienced Appraisers.
Experienceappraisers.com. Yeah, that's where experience comes into play. AJ, great to know you're out there listening, supporting, and thank you very much for diving into the conversation. Hope to have you in studio before too long, buddy.
Thanks,
All right,
AJ. Have a great
rest of your
weekend.
We have about 9 minutes remaining, Jimmy D.
Yeah.
And you teased a bubble.
Yes, that's
that we
what I'm
have to get
Thank
into.
you. We're going to get to it right now. The bubble in Florida. Drum roll, please. Punta Gorda. Okay, let me give you an example of what's going on with Punta Gorda.
Best I can do right now.
That wasn't a drum roll.
In Punta Gorda, since 2020, since COVID.
What does Punta Gorda mean?
Yeah, what does that translate to?
Fat point?
Fat point, right?
That's
fat
right.
Point.
The fat point.
Right? Mike knows. He's just screwing with me to
That's
see
where
if I know
that's
anything, 'cause
where
I'm a gringo.
that's where Long James had his first birth.
At Fat
right?
Point, yeah.
So
thank you.
That was BERTH, guys, not BIRTH.
So check this out. In Punta Gorda, between December 2019 and July 2022. Okay, so what is that? That's less than 3 years. It's two and a half years.
Yep.
73.2% increase in appreciation over that 2.5 years.
Let's go.
Now,
how much?
73.2% in 2.5 years.
That seems sustainable.
That's
that sounds right.
$200,000
dropped
$350.
It's dropped 9.1%. The median sales price has dropped 9.1% there recently. Okay, over the last several months. So we're seeing that area crater, and I told you kind of why back in February, because this is what the agents were telling me that were working out there. After the hurricane, you had all these houses that were completely wiped out. So they used their insurance to rebuild, but they weren't planning. The great majority of those people apparently weren't planning on staying there. They were planning on rebuilding, sell a brand new construction home. That's what their plan was, right? Well, a lot of people had that plan. And there's a lot of people that don't want to move there because of the hurricanes that just happened. They're like, I don't want to get wiped out by the flood, right? And there aren't as many people coming in because they're worried about what just happened. And now there's too much inventory.
So high inventory, lots of sellers, not very many buyers.
And higher interest rates and high insurance costs and high, right? So even though it's brand new construction home, which actually insurance would be better for these new construction, way better.
If I'm checking
Jimmy
boxes on the new home that I want to buy, brand new construction, check.
Yeah, that would be a good
price.
That would be good.
Decline in the neighborhood, check.
Yeah. So
interest rates dropping a little bit, check.
Yeah.
Yep.
Punta Gorda.
Yeah, you're at the fat point.
Not sure.
Yeah.
I don't know. Could be
So
perfect.
we're going through some pain over there, and we're seeing it throughout the state now and through the rest of the country. We're actually seeing markets decline. Austin's declining. Denver is really slowed down. If it's not declining now, it's on the precipice of declining. A lot of the hot areas, Florida, despite what people think, is not as hot as North Carolina and South Carolina right
Felt
now,
pretty
and
hot.
Georgia.
Yeah, I don't know. The humidity's got sucked out.
Well, it's hot
Yeah.
that way. It's hot
Bad
that
hair
way.
day.
My
again
buddy
today.
came down from North Carolina on 4th of July, and it was hotter in Charlotte than it was here.
Yeah.
Yeah,
People lose
so-
sight of that also. It's
Yeah,
been
people,
hot
it is hot.
all
Yeah, it
over.
is.
Oh,
yeah,
yeah.
you're right. You're right about that. But people,
It's almost like the globe.
but people's
is warming.
attitudes
It's
is
weird.
that it's
I joke.
time to leave Florida. There's a lot of people out there. In fact, I got a call from one of our longtime listeners, called me up to complain that why don't I like Florida anymore?
What?
They actually
Yeah.
said that. Yeah. And I love Florida.
You're like,
I've been down
"What?"
here. I've been down here since '74. I have no plan on leaving.
We're dogging it so nobody comes.
Even if I were to buy a second home, it would probably be in Florida somewhere. It would probably be somewhere in Florida, St. Augustine.
Probably
Maybe
St.
people
St.
get the wrong
Augustine.
impression because you always do the Florida thing.
I know,
but you actually
but
revel in the
I
Florida.
like
You love it.
Florida. I
Yeah,
love the
yeah.
craziness. This to me is like, I don't want to live in a boring state. I want to live in
Right.
an exciting state. It's very exciting.
Let's go to Idaho, guys.
Yeah, exactly. I'm so
Sorry.
bored,
Love
right?
you, Idaho.
Yeah.
Yeah, seriously. Nothing but love.
Like I look at your
I
dad's
mean, we're not going to live there. But
I look
nothing
at
but
your
love.
dad's
There goes that
backyard,
fan
Mike,
base.
and I see all
Yeah.
that, everything out there. And
Yeah.
he says he goes walking out there and everything. And I'm like, yeah, but oh my God, I don't know. It's just
It's beautiful,
Too,
but
it's
you go walking on the
gorgeous.
beach.
Nice to visit.
It's gorgeous, but
Yeah.
there's not a lot to do out there. So the thing is we have probably hit the peak, guys. Okay. We're probably close to right now in this cycle is as good as it gets, unless the Fed does something with the rate in September. Now, we've already seen the interest rates drop a lot. I was a little disappointed, Mike, that we only went from we actually went up a little tiny bit. We went from 6.47 to 6.49.
Yeah.
I thought we would I was hoping I was going to open it up on Thursday and see like 6.3 something. I was really hoping
just
that was
because of
gonna happen.
the
between
news cycle.
Between the
Yeah.
jobless
Yeah.
rate, the unemployment benefit report, which was the lowest, lower than it was predicted.
Yeah.
Even though that the unemployment rate was higher,
the money
being spent for unemployment was not as high as everybody expects. So we had that roller coaster ride for 4 days because of that stupid stuff. And that to me was more Wall Street making a big deal and
market
having a
movement.
hissy fit about stuff.
Yep.
But the bottom line is that unless these interest rates drop a lot lower, not sure if that's going to happen. It's really up in the air right now. So I could see this going two ways.
I don't think there's any scenario where it drops a lot lower, right? We're talking about little drop, if anything, a quarter of a point.
No,
Is it half a point?
I think that the Fed would like to get down into the threes. We're at 5.5 right now for the Fed rate. I think that they eventually would like to get to 3 or lower, so they have a cushion in
I don't
case
think
we
they care
have
about
another
that.
blow to the economy. I don't agree with that at all.
They don't care. I don't think they care about the number they're at. They care about what that number is, the impact, how the impact of that. number, right?
I don't agree with that. I think that is, I think that's a very important point you guys are making, but I also think they have to worry about the future and do they have a cushion to do something? At 5.5%, they don't really have a cushion to raise the rates again if we needed to, right?
Really?
No, I don't think
without devastating
without getting into a
so they
stagflation
hold.
Jimmy Carter thing.
But okay,
And you and Johnny are still betting that they're holding, right? Or you guys still betting
I
that way?
still bet that for
I'm
sure.
still betting that they're going to do
I think
a quarter.
the only reason they would do it, and it would be they're getting influenced by the wrong side of things. It's to try to crank things up for holiday shopping. But that's super.
I think
like,
of
buying
late
into some nonsense.
Of late, they can crank things up just by talking about lowering, and
Sure.
then when it comes time, he's like, sorry, it's not really where we want.
It's not time.
I did read a report last week that said that consumer spending has dropped. I don't want to say significantly, but it's dropping.
It's slowing. It's
slowing.
It's doing what they want it to do. Yeah.
Exactly.
And they're not to the markers yet. We're not to the markers yet where I'd feel comfortable in predicting that the Fed's going to raise. And again, this is a super uneducated perspective. But I don't know. I read a little bit. I believe they're going to hold, and the election in November I think is another strong point where they're like, we're just going to leave that alone.
Right, neutral. We stay neutral.
Exactly.
Yeah, sure, I could see that.
But I think it's working. I think it's doing what they want it to do. They're not to where they want it to be. So I think they just leave it alone.
The best thing is like none of us really have the crystal ball, so we'll see how it plays out.
Yeah, this one's going to be interesting. I don't think it is clear cut
like a
as
month away from learning.
Some of the other times. I don't think it's as clear cut. But I think they might do it just because I think they might do it just to see what's going to happen. The quarter point isn't going to make or break either way.
I still see headlines that say they're going to do 3 cuts.
Yeah, but
in
that's
the year.
Wall Street. That's Wall Street craziness. That's Wall Street just saying what they want, not what should happen. You can't, some of this stuff, everybody's got an opinion. So who knows? Sure. We're going to find out. But I don't see that is a very realistic. I see a quarter point drop, maybe just to see how things are going to go and see if it heats up, if it really heats up the economy or not, and then just see what happens. And if they
raise it,
I think that they might actually.
That's a weird
do that because I think they're betting they won't have to.
I feel like it
wouldn't crank people up to spend if they felt like they could.
I think they have much better tools for measuring the temperature of the water other than dipping their toe in it.
I do too.
Mm-hmm.
They don't need to dip their toe in the water. Like they know. When they drop it by quarter point, they got good predictions.
I don't have enough confidence in the government to think that they know.
It's not the government, though. It's the Fed.
That's the government.
No, it's not. No, they're not.
That's way in the shade.
Yeah.
I mean, who knows who's pulling those strings?
Okay, so I know we don't have any time to talk about this, but one day you guys are going to teach me about the new kickoff stuff because I saw it for the first time yesterday. I watched something with the new kickoff for the NFL.
NFL nice.
I don't understand it. Somebody's got to teach me.
Oh, you'll learn.
I'm too old.
Yeah, come on. You'll learn real quick.
We'll stay right in that studio there. We'll talk about that.
Yeah, I know. It's coming up in a second.
Might even keep you right on that mic.
Yeah,
might turn it on too.
Probably not.
Old radio joke.
Next time we're going to turn that on. You being with us means everything. Thank you very much. Remember, Florida Talk Real Estate is at .com. Your access to the entire team, your one-stop real estate shop is FloridaTalkRealEstate.com. You get pros, people that are experts in their field, like Ross Komarinetz with Brightway Insurance, Juno Beach. Have a great rest of your weekend, my friend.
That's right. I hope everybody does too.
Always a pleasure. We got Mike Rauch, the mortgage guy from the mortgage firm. I hope you have a great rest of your weekend.
You too, Johnny.
Am I going to see anybody at Chicago and Earth, Wind, and Fire tonight or what?
Not me.
Groove tonight.
Jim, you might be there.
Earth, Wind, and Fire. No, it's the Commodores, not the Earth, Wind, and Fire.
Yeah.
I said one of my first concerts was Beach Boys and the Commodores together, University of Miami.
Hey, Lionel Richie carried them, but they were awesome.
Yeah.
Commodores best.
Once, twice, 3 times.
Earth, Wind, and Fire. They're old. They're like
I like Earth, Wind, and Fire.
Sunday morning.
Dust, farts, and sparks.
I like
We're going
Earth,
to
Wind,
groove
and Fire.
tonight in Chicago too. Let's go.
I think that show sold out too.
Is it really?
What I hear, yeah.
Wow. Get wild there. We're going to be in the pit. Look out. Yeah, the pit. Jimmy D.
That's awesome.
Those innovations. Oh, yeah. I'm breaking hips tonight. And I'm looking for ladies with money, too. Call me Pledge. I'm knocking the dust off that. Let's go.
Watch out for the fruit flies.
Just trying to ruin things on the way out.
Just lost Mike.
We got the locker room coming up. We thank you very much for being with us. Share it. Know it, use it, love it, share it. FloridaTalkRealEstate.com.